This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. That's going to be a most interesting day, to say the least. There's a lot of great conversations coming up today. Paul, which one interests you the most?
Oh, there's a lot going on here. We got earnings coming out left and right. Dan Ives is going to be in studio. I'm not in studio. He's going to be phoning in because I don't know where he is around the world. But Tesla put up some good numbers, Tom. I was kind of pleasantly surprised. They're selling some of those big trucks. I don't know if you have one in your backyard, but
we don't.
Big trucks.
I saw one. I saw Tucker's. I was on Madison Avenue. I took some photos of it.
Okay.
It's pretty cool. Late in the 9 o'clock hour, I don't know if you should be in the Hall of Fame, but I am certain in terms of intensity of play,
Yep.
no one deserves to be in the Hall of Fame. Listen to this. In 2006, he becomes a Yankee, traitor that he is.
Amazing.
He goes 3 for 6 in each of the first 3 games. So I think that's 9 for 18. And he had 2 home runs, 8 runs in the first 3 games. He scored 8 runs as well. Johnny Damon will be here today.
I know, that's going to be cool.
It's like an honor.
I mean, he was a really, really, really good Yankee, but I consider him a Red Sox.
Thank you.
I do.
Lisa, do you want to weigh in on that?
Yeah, I guess you could say Red Sox. Yeah,
I mean, but he was a really good Yankee. We loved him when he was here.
Mike Green, would you like to weigh in on this before we get to
everybody around.
Me on sports is a bad combination.
We'll get to Mike Green here in a moment, starting off our strong conversations of the day. Futures up 24. Let's get right to it. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got a mix of red and green on this screen. And this is after Tesla's blowout earnings. You talked about it, posting its biggest quarterly profit in more than a year. Tesla shares up 11% right now. That's giving a boost to the tech sector in particular. NASDAQ futures up about 0.7%, 159 points. We have Dow futures down 0.1%. S&P futures down 0.4%, up 0.4%, or 24 points. We have the 2-year yield 4.05%. That's down 3 basis points. The yield on the 10-year 4.18%, and that's down 5 basis points. To commodities, we have Brent crude $75. That's up about 1%. WTI crude $71 a barrel. We have spot gold $2,737 an ounce. To earnings, they're coming in fast and furious. We'll start with UPS. They're up more than 6%. Profits came in above estimates. A big part of that thanks to an increase in revenue per piece. And IBM shares down 5%, reported underwhelming sales. It's dealing with a slowdown in consulting demand. Then we go to Mattel. They're up more than 2%. Third quarter profit beat estimates despite lower than expected sales. Now, meanwhile, Hasbro cut its consumer products segment revenue forecast for the full year. We still have results from Southwest, American Airlines. We'll get to those in just a bit. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks so much. To start strong today, Mike Green joins us now, Chief Investment Strategist, Simplify Asset Management. Are bonds and stocks correlated right now?
Bonds and stocks are positively correlated in terms of the price component, and so that means you've now lost the hedging value associated with bonds.
How naked is the market then if they can't protect themselves by hedging?
Well, this is, I think, is one of the really interesting components to it, is that we haven't seen that much of an impact on the equity market. We've absolutely seen a decrease in demand for bonds relative to what we've seen in the past. That demand for the duration hedge is simply no longer there.
So what are we doing here? Mike, we're getting kind of into the teeth of earnings here. I'm not sure what's driving stocks over the next 6 to 12 months. Is it earnings? Is it Tom's favorite discussion point, which is the Federal Reserve? What's really driving markets here, do you think?
So I have a heterodox view on this, which is unfortunately the vast majority of the action we see is largely mechanical in process.
So, let me interrupt. I got a heterodox view on Johnny Damon as well, so continue.
I'm glad we can join on that one. The simple answer is as long as Americans have paychecks, as long as their money is flowing into 401ks and retirement systems, you have an underlying bid for the market that then is then exacerbated by various institutional features to it. When we see those numbers start to change, then we'll see the flows begin to change and we may begin to see a market reaction to it. But until then, as long as you have a job, you're putting money in that 401k, You're dollar cost averaging into the market. You're going to place upward pressure on it that is largely independent of earnings on any one individual company or the overall market itself.
Torsten Slok, our good friend at Apollo, is just out with a note, which I'm going to have to quote from here. It's all about NVIDIA. NVIDIA is now bigger than the total market cap of 5 of the G7 countries. The bottom line is that global equity markets, including retirement allocations to equities, are basically leveraged to NVIDIA. Boy, that makes me nervous. Does that make you nervous?
It makes me nervous, but it also has some interesting components to it, right? Because we're all leveraged to the idea of productivity gains around AI, right? If we have a baby bust in terms of following the baby boom, we're going to need some way of handling that retirement. Really smart computers and robots seem like useful tools in that process. Right. But with that said, to have all of our retirements tied to it, that may be something very different. There has been some really fascinating stuff written around this. I would argue the largest feature of NVIDIA right now is exactly what Stan Druckenmiller said the other day. He regrets every share he sold.
Yeah.
Right?
Yeah.
If you're going to minimize regret, you don't sell shares, the price goes up.
Interesting, to say the least. Yeah. It's in October, on our way to November. How are hedge funds doing? Like its categories, how is long short? How is global macro? How are the black box crew doing?
The black box crew, I think, are doing slightly better because by and large they've followed into trend following type strategies. Yeah. Obviously, we've had strong trends associated with that. That has been one of the solutions, by the way, to this loss of correlation in equities and bonds, is finding uncorrelated assets like trend following strategies. I would argue that the long short component is really struggling. We've continued to see a year in which very low quality companies have occasionally exhibited extreme upward momentum to the top side, right? In other words, you've had short squeezes. That's been challenging for the short community. I think 2024 is a better year for that than we saw in 2021, for example. We're not quite seeing the same level of mania in the worst stocks out there. So there is some component of rationality that seems to be in play.
How does the VIX play into this? I mean, as a stand, I know it's something not sophisticated enough for Mike Green, but at 18.73 is a barometer of angst. Does the VIX give any information right now?
So I think there's two separate components to the VIX, and I think it's really important. Dean Kernat at MRA Advisors actually just wrote something on this. The VIX has two components to it, the single stock volatility and the implied correlation. The single stock volatility right now is somewhat elevated because we have earnings reports, right? So the individual idiosyncratic nature of each individual stock is now being reflected in those option prices. In the correlation space, we're experiencing super low correlation amongst those largest stocks. As Torsten points out, it's all about NVIDIA. That means if NVIDIA goes up, something else has to go down. When you have that very, very low correlation, it just tells you there's really not fear. Right? People are basically saying all the risks are company specific, very few systemic risks. And that's really what I would focus on.
Mike Green, thanks so much today. I've got to keep it short. Got to go dash off and do a Boeing. Mike Green will Simplify with us this morning. Interesting to see, to say the least. Futures red and green in the screen. Dow, a little bit red, affected there by Boeing, among others. McDonald's after a difficult day. But the NASDAQ up a solid 172 points, up half of make that 0.8, make 0.9% as well. With Mark Campion, this is the most qualified guy we have on the scope and scale of Europe, the Western Hemisphere, and his specialty, which is aviation. Benedict Campbell joins us now, just exquisite on aviation industry. Benedict, were you surprised that the Boeing workers said no again?
I'm going to say yes and no. I was surprised that they voted sort of as many as did. I would have thought that they would have either more resoundingly voted it down, and we've now got sort of 30% actually sort of better than what we had last time. At the same time, if you look at where they're coming from and the bitterness that is among the workforce that has lingered there for decades, literally at this point, then it's not really surprising. You know, we look at the numbers and we think, well, 35% wage increase, that sounds great. I'd take that. But these are people who are coming from a very low base, who had some deals in the last decade that were very badly received. Their pensions went away, and they're in it for a fight. And there's an element of burn it all down. And that's going to make it very difficult for Boeing to come back with an offer that is truly compelling.
What do you think, Benedict, that the workers the union really wants? Again, as you mentioned, 35% for a lot of people over 4 years seems pretty solid. What do you think they really want?
What they really want is a defined pension program that they had until 2014. That was taken away from them. That was a sort of a defining moment for the relationship between upstairs and downstairs at Boeing. Boeing has said, we are not giving you that back. That is our red line. That's not going to happen. So what you'll probably see going forward is some tweaking. You'll see maybe those 35% go up to 40%. You will see a little bit more on the signing bonus. You will see a little bit more going into 401ks and so on. But that to Boeing is a red line. And the other thing that Boeing needs to be careful about is they have more deals coming up in the next couple of years, more unions that they need to agree with. They don't want to be seen as too soft. And that's something that the new CEO needs to get right. Conversely, he has said that he wants to reset relations with the workers, with the workforce. And so he needs to get the tone right. And right now, there's so much, as I said, lingering anger and rage, frankly. If you listen to some of the voices yesterday and the press conference, people are really, really angry.
Benedict, I got to go to your wheelhouse. I mean, you better than anybody I know knows Toulouse and Seattle. How is Airbus opportunistic out of this? What is the Airbus strategy to grab the romance of Boeing that we believe in that is being shattered in real time?
Well, it's not going to happen overnight, and I think that's one of the big misconceptions that people might have, that they think, well, if Boeing can't make any planes. Just to give you a number here, Boeing right now is producing 4 planes a month. 4. Yeah? That is really nothing. 1 plane a week. This is one of the biggest US manufacturers, and they're making 4 planes. So you would think that Airbus has a golden opportunity here. The trouble is Airbus also has sort of one arm tied behind their back because they have a strange supply chain, and these are long-term customers that they're dealing with. If you're a Boeing customer, if you're traditionally buying Boeing, you're not just going to go over to Airbus and say, hey guys, do you have some planes for me? Airbus would probably like to sell you some, but they're sold out. That's number one. And number two is, as I said, switching from one to the other is hugely complex. You have training, you have manufacturing, you have maintenance. All of that is tied into your customer relationship. So switching over is difficult.
Benedict, what are we going to do about all the luggage people carry on board when Michael Barr flies? Michael Barr went out to the West Coast, Benedict Camel, and they had to put 3 bags down in luggage. What is the industry going to do about all the luggage that's being loaded on the planes by passengers?
It is out of control, I can tell you that much. I was on a plane from Berlin to London this morning, and I was one of the first people to board, and already the plane was full, the overhead lockers. I'm like, how can this be? I'm like one of the first people on. But so people are tired of checking in their luggage and waiting for hours to see it arrive at the other end. And so people are saying, look, I'm going to put as much as I can into the locker, into the overhead locker. Maybe just need to start wearing all your stuff, and put less into the overhead. But in all seriousness, airlines are or aircraft manufacturers, I should say, are looking at this. They're thinking about how can we increase the space, how can we make the whole thing more efficient. But it's a behavioral change that we've seen where people traditionally would check in more, and that's not going to go away.
Benedict, we got to go. Thank you so much. You're a trooper for coming on. Was our best guy on airlines.
Yep.
Benedict Camel there on Boeing. The workers vote down the strike. Red and green on the screen. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. All right, to futures right now. NASDAQ futures ahead this morning. This is nearly 50 companies opening their books today. We're going to get to some of them. I want to get to a much-needed boost from Southwest Airlines, up 3%, reported third quarter profit more than double Wall Street's estimates. That's showing it's making progress in efforts to slow growth, also to cut costs. Over to American Airlines. They're up about 1%, boosted its adjusted earnings per share guidance for the full year, beating estimates. Then you have Honeywell. They narrowed its adjusted earnings per share guidance for the full year. Those shares down more than 1%. And finally, T-Mobile up 2%, reported third quarter results, beat expectations, raised its full year subscribers forecast. I can't help but mention Boeing shares. They are down 3%. Factory workers rejected a new labor contract. And then we'll have to touch on McDonald's. Their shares on the mend. They fell 5% yesterday. Right now, they're up about 0.5% after that deadly E. coli outbreak at some of its restaurants. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. Joining us now, huge response when she was in last time. Crystal Ronda de Lint joins us from Vontabell. It's a huge European complex with a arch view of our global economics and how to invest. Crystal, I sat here at 8:42 yesterday and made my chart of the year. It was the Bloomberg Corporate Total Return Index, just standard price index. We cratered 6.5 standard deviations off of the horrific bond market that you've lived for 3 years. And the recovery this year has been an act of God. We're almost halfway back, not quite, almost halfway back. We're just below 3 standard deviations off the long-term trend. It's my chart of the year. I think bigger than the bull market, bigger than Mag 7. Paul mentioned NVIDIA is the bond bull market. Will it continue?
Well, you know, it's hard to say. I wouldn't go on to the timing, but when you look at the S&P 500 now, you've got 2/3 in 493 stocks, a third in 7 stocks. So no, eventually it's going to have to turn around because we're going to end up with the S&P 7 otherwise, if the trend continues like that. Now, I might want to tell you when and how it ends up. I don't know. I don't know. I mean, but it's if AI is real, it's going to have to go through the other companies, and we're going to see that in the earnings of the other companies. That's the next step to come.
Are we seeing that? Are we seeing that broadening out? Because the S&P 500 up 22%, the S&P equal weighted up about 15% or so, and that's actually better than it had been. Do you need to see a broadening out in the stock market performance?
You do. You absolutely do. Yeah, absolutely, because it means it would be real, right? It's just...
where do you think we're going to find it? Is it going to be financials, energy?
Well, it should be. If AI is the revolution that we all say it is, and I actually think it is, we will see it a bit everywhere. And we're going to have losers, and that is going to be the companies that cannot adapt to it. But yeah, it will have to be a bit of everywhere.
All right, so at Vontobel, you can see everything. You can go anywhere. Stocks, bonds, you know, Europe, U.S., everywhere. Where is the best opportunity for you guys right now? You're based in Zurich, right?
Yes.
You're here in New York.
Yes.
You're talking to your clients. What are you telling them?
Yes. So, you know, I knew you would ask me that. And I think if there's only one thing that you have because it depends on your risk appetite, right? But if there's only one segment you have, I'm going to say fixed income.
Okay.
So that's the one. However, the most important part, beyond the views that you have, you've got to build a diversified portfolio. You have got to. What is going to stick around is more volatility. We have less diversification in the indices right now, more uncertainty than we ever had. So that is the crux. Know your risk appetite, diversify.
All right, so I'm in fixed income. Am I sitting in my 2-year treasury? I'm very happy at 4.04%. Or do I take some credit risk?
Yeah, you ought to, because you're not going to be sitting at that level for that long. The Fed will keep cutting. And by the way, I think investors, it's not a blame, but investors have been a bit slow. We've been waiting for the Fed to move to this, to that. Well, you know, it's just when they start, it's kind of too late. I mean, it's not too late, but you should have started earlier.
How do you sort UniCredit, Commerzbank? Is it the advent of a bank consolidation that we can profit from in Europe?
It's a big thing. There's no question about that. You see that there's quite a bit of backlash. I'm someone who likes to look at the glass half full, so I think it's a good kick into the system to be able to potentially indeed consolidate where there are needs.
Because Tom and I feel like we could go over to Europe right now and consolidate the European banking business in a heartbeat. Why doesn't that happen, do you think? I mean, you're right smack in the middle of it in Zurich, global European Wall Street. Why doesn't that happen?
To a large extent, it is happening with the smaller banks.
Okay.
We see that happening, and we're part of it in a sense on the acquiring side for smaller pieces. But I think many times, and I come back at you with that. Last time we did that as well after the Credit Suisse. Same reason that sometimes it does not consolidate in the US, but it is happening.
So. Central banks around the world, maybe with the exception of the Bank of Japan, are easing. Is that how constructive is that for just risk assets in general? I mean, can it be as simple as, hey, I've got central banks cutting rates. I'm just going long risk assets, stocks, bonds, real estate, whatever.
Yeah, it is somehow almost as simple as
Lisa,
that.
I told you it's that simple.
It's almost as simple as that.
Deal.
Yeah.
Lisa's taking notes.
It is almost as simple as that, to the extent that it prevents a recession, in a sense. It becomes more complicated where you haven't eased as fast as you thought you should, and you go into recession.
Christophe, we got Johnny Damon coming on here later. He's a baseball player, like mega superstar. Like we're all like, it's almost as big as having Crystal.
I'm wondering where that's going now.
Today, in baseball, there's 9 innings, and you say in a bull market, what inning are you in?
You got it right.
It's like Field of Dreams. We're gonna get there. So, what inning are we in the bull market? I think people underestimate it because we have no memory of a real bull market.
Yeah. If I had to take a guess, I'd say 2/3 because I don't think we're finishing just now. So that's my best guess. I'm struggling to say half because we've
just
quite
before
extended.
the 7th inning stretch.
Yeah, but 2/3.
Yeah, okay.
Knowing that I have no baseball reference, so that's why I'm going back to stats.
You're in New York. You can go to a World Series game in New York. Monday, I think they come back off the.
I did Women NBA. I did see the Liberties live last year, and now they won. I'm learning.
Very good. How about in Europe? Just give us a sense. You're based in Zurich. Just give our listeners and our viewers a sense of how the European economy is. How are the people, the person on the street in Zurich, in Paris, wherever, in Berlin, how are they feeling these days?
Do you know what? It's very surprising. The numbers tell you much worse than in the US. We've got a lot less growth, but the feeling, the sentiment, is it down to inequality? Possibly. The feeling is a lot better, I think, than here.
This is a really important statement. I just got back from Rome, and that's exactly what I saw.
Yes.
Talking to the drivers.
Very strange. Right.
And the tourism, Paul. Last year, 25% of new jobs in Italy were from tourism.
Is that right? Yeah, that makes
It's gone from like 8% of GDP.
And it wasn't
to
quiet when you were there, right? I mean, it was almost summer-like.
Yes.
October's the new August.
Yes.
Yes. Okay, well, this is
Zurich's a great town. We could do a remote there. I mean, we say that every day, Tom. We could do a remote.
Come over.
It's a great
We'll
town.
host you.
Watch Game 1 of the World Series here. It's on Friday.
Yep.
I have an important announcement to make here in about 10 minutes. I got to get it on Twitter and LinkedIn. But Crystal, thank you so much. Crystal Rondu-Lind with Vantable of Europe with a wonderful, really holistic view. For those of you with like fear in the market, it's, what I talked about Michael yesterday from JP Morgan, same thing. How do you participate if you're scared stiff? Is an arch feeling.
The courage to be in the market.
Should we do the foreign exchange data check for George Saravelis?
Sure, absolutely.
I think we should. DXY 104. Yeah, yen was a 153, rounded up 152 right now. Weaker yen over the last week. Euro, Crystal driving the euro down 109. Down to a 107 handle. Euro yen showing stronger yen today after a tough couple days. First thing I looked at this morning, coming in besides a bottle of Motrin, was the Mexican peso. It comes in stronger, 20 to 19.83. It's Bloomberg Surveillance. Run on YouTube. Subscribe to Bloomberg Podcasts on your commute. Apple CarPlay.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen. This is as investors continue to watch the pace of Federal Reserve easing. Today, we have some more economic data for them to sift through. We have initial jobless claims. That's at 8:30 Wall Street time. That'll be followed by a read on manufacturing and also new home sales. All right, let's get to futures. NASDAQ futures up 0.8%, 177 points. We have Dow futures down 0.1%, S&P futures up 0.4%. Want to head over to the Stock 600. It's up 0.5% right now, about 10% of the entire Stock 600 index set to report today. Want to get to some of them. Barclays up more than 3% in London, posted a surprise increase in fixed income trading. Then you have Unilever up 3% in London, revenue increase 4.5% in the third quarter, beating estimates. French automaker Renault up more than 6% in Paris, confirmed its full year guidance. It expects to benefit from those new models. And finally, a positive sign for the luxury market. That's thanks to Hermes. Yes, sales topped estimates third quarter. Wealthy clients scooping up those Birkin bags.
No, the ties. It's all about
oh,
the
the ties.
That's
Is
my
that
go-to.
what it is? I don't know. I got to go with the bags. Shares up 1.5% in Paris. That is your Bloomberg Business Flash. Paul and Tom.
I looked at that carefully, and it's just incredible how their business model's different from everybody else. And this, to me, gets to stock selection. Everybody's piled into index funds.
Yeah.
And, it's as simple as that. And there are these individuals. I mean, Tesla, we're going to have Dan Ives on.
We are going to, yep.
I came in on a Tesla. The Bentley's in the garage.
Okay.
Came in on a Tesla.
Sure.
It gets you there.
Yep.
Joining us now,
Funk.
Gura. David Gura joins us now. One of his many duties, he's with the Big Take, providing intellectual input there on our politics and how it links into our economy. David, excuse me, I got the plague, folks. What can I say? David, as simple as I can, aren't elections supposed to be close?
They are, but we really haven't had one this close, or at least as close as these polls indicate for a long time. So,
like 1960.
Well, yeah, you look. There you go. You look at the latest Bloomberg Morning Consult poll. 49% for one, 49% for the other. The margin of error here 1%. So just really on a knife's edge. And there shouldn't be a lot here that's surprising to regular listeners to this program or any sentient beings in this country today. I mean, we've known that this race has been and is close. This is kind of confirmation that that's the case in these 7 swing states.
11 p.m. November 5th. Are we going to know anything?
We're working that weekend.
We're working that weekend. I think that's safe to say. Now, look, it's likely to be a race that's going to take a long time to get a final result on. And so I'm going to be in Pennsylvania for election night itself, and I've been in touch with a lot of election offices around the state. Many of them are just emphasizing how careful they're going to be about getting these counts done. Yes, we're going to get unofficial results from them the night of, but it's going to take days, I think, to get those confirmed based on just the procedures that they have in place, but also just how much attention is being paid to this. And then we know, of course, there are legions of lawyers on the wings who are waiting to pounce on anything that might be seen as untoward or wrong.
What people engaged in this ask me is Georgia. That seems to be you mentioned Arizona weeks ago, but Georgia, Trump is ahead in Georgia. Are we supposed to be surprised?
That is probably one of the closest races of these 7 and has been for a long time. I think that it's a must-win for the former president. It's one that Vice President Harris would like to win. She's going to be there today with former President Obama and with Bruce Springsteen for a big event. Donald Trump was there last night for a big rally. So they're investing a lot in it. This is a state that has early voting. People have been going to the polls already, and the turnout has been incredibly strong. So to summarize, very important for both of these candidates, of more paramount importance, I think, for former President Trump.
What do we know about down ballot? Is it as close there as it is?
That's a girl.
You get it up. I listen to Joe Matthew. I watch Joe Matthew.
Down ballot, they played reggae like no one.
Exactly. Is it as close to there, David?
It's very close, and it's going to take some time as well to kind of find out what the composition and the balance is going to be in both the House and the Senate. It's interesting. You watch how these rallies unfold. Donald Trump isn't one to sort of envelop or elevate those down ballot from him. Yes, they show up at his rallies, but that's, of course, not the star of the show. They're not the star of the show. You see Vice President Harris on stage with a number of these candidates for Senate and House, especially in these contested races. So, both parties are paying close attention to how all of this shakes out. And you look at that map of the United States, we focus on not just swing states or swing districts, but sort of swing neighborhoods almost. A lot of those dovetail with these very hotly contested congressional races.
Do celebrities matter? Do people actually vote because Lisa Mateo's on stage with someone?
I would, of course. I think that, we're seeing this push now 12 days out to get people off the couch and to the polls or to go to the mailbox to mail in that ballot. And so I think that the excitement surrounding these events, elevated by the fact that Eminem's there, Bruce Springsteen is there, or Jason Aldean down in Georgia. I mean, both of these candidates are leaning on that, and it kind of is emblematic of the fact that they want to create excitement, and they want to reach out to people who, again, might have some apathy or ennui about this. Now, this has gone on for, 8-9 months and are getting just tired of the whole process.
What I understand, David, it's a story about getting out the vote. Does either side have any particular strength relative to the other in terms of getting out the vote?
We know much more about the details of and the composition of the team that Kamala Harris has in place. She's raised more than $1 billion in this campaign, which is just extraordinary and what could kind of reprehensible as well. That's where we are in American politics, that money matters so much. But we know that she's deploying that across this country, yes, in those swing states, but beyond.
Right.
Hiring staff, spending a lot of money on advertisements, both digital and television, traditional advertising. The Trump ground game is, I don't want to say it's more secret. We just have less information on what that's like. They have confidence that they have it. But again, they've raised less money than
Right.
Vice President Harris has.
Your great chart, Nancy Cook's great chart here for Big Take, shows the margin of error clearly. It tells me this poll's total baloney because we have no idea what we're doing within the margin of error. What did you learn from 2022 about margin of error where so many got it wrong?
Well, I learned a lot from 2020. 2022, it's a little different because it wasn't a presidential election. But I think that there is, people are right to be skeptical of all of the polling that we have. And of course, ours is one of many. And I think a difference this year is just how many polls we have, how inundated we are with them, and how important it is just kind of look at them all in complements. So the particular special sauce that we have is, since October of 2023, we've really just focused on these 7 swing states and kind of charted both how these candidates are doing. Of course, it was Joe Biden until it was Kamala Harris, how they've been doing, but also what issues are important to voters. And I think, as we've seen, you mentioned that chart. There's another great chart there that Nancy Cook and her colleagues have made that shows just how the economy has been the paramount issue for voters from the very beginning by such a wide margin. Beneath it are immigration and abortion, but it is the economy that these voters care about. I think that's something that stands out to me in our poll. That's something that I can get a lot of credence in from the poll. The key question is, which candidate do you trust to handle the economy going forward? 50% of respondents to that poll in those swing states, likely voters, say it's Donald Trump. 45% say Kamala Harris. That has to frustrate her. At the same time, she's got to be happy that number is higher than it was for Joe Biden. She has made up some of the ground that he had lost on that issue.
Paul, I'm not the scientist on as Gura is, but on taxes, they're equal, which I did not expect.
No, it's interesting here, David. Elon Musk. That's been interesting to watch. Do you think he's had any influence or impact here? Because he's certainly been high profile.
Come on, make some news here, David.
I should have opined on that when you asked about celebrity. I should have brought that up.
What's DOJ going to do? Cut to the chase.
On this sweepstakes issue?
Yeah.
I think that they're looking at it pretty seriously. So those who haven't followed this, Elon Musk has said he'll give $1 million a day to voters in swing states who sign a petition saying that they pledge fealty to the First and Second Amendments. And people have appeared with these sizable checks. He's giving out these $1 million amounts. What's illegal is paying someone to vote, and what he seems to be trying to do is skirt that by saying, I'm not doing that. I'm having them sign a petition. But you asked about his role. I could have talked about it when you asked about celebrity, Tom, but he's playing a huge role in Pennsylvania. He's spent $75 million in that state. He's sort of set up an operation there. He's held town halls. He is trying to be this link, one of many that Donald Trump has to the bro vote, these young men. And we see Donald Trump tomorrow going to sit down with Joe Rogan, who has a wildly popular podcast. Way more popular than my pod, bigger than the Big Take by droves, and that is the audience he's trying to target. There are young men who listen to that podcast.
Is it true, David Gura, that Mrs. Barr is out on a street corner in Pennsylvania waiting for Elon to stop by with $1 million check?
I cannot confirm or deny that, and I'll follow up on that. But
okay, David Gura, thank you so much. Great analysis.
Great to be here,
folks. The charts are hugely informative, particularly over this foolishness and reality of the margin of error.
1%.
Yeah, it's crazy. So, folks, the article Tom's referencing and David was referencing, 2 weeks out, Trump and Harris are locked in a dead heat. And that's out on the Bloomberg terminal. You can get that at Bloomberg.com. It's got some latest polling data out there. And basically, as David was telling us, it's neck and neck.
David, you got to get up. Michael Barr's got to sit down. We got to do something.
You got to do some hard-hitting news here.
David Gura, he's host of Bloomberg Big Take podcast.
Yes, he is.
On the new Bloomberg News Morning Consult poll, that and the 2024 election. Red and green on the screen right now. NASDAQ, Dan Ives surging. Ives will be with us later. I'm not sure what time, but we'll get Dan Ives in here with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. And as you guys have been talking about all morning, the presidential contest between Donald Trump and Kamala Harris could hardly be tighter. The candidates are statistically tied among likely voters in each of the 7 swing states in the Bloomberg News Morning Consult poll. It comes as Harris took questions from undecided voters last night. The Democratic presidential nominee joined a CNN town hall in Chester, Pennsylvania.
Part of my plan is to create a new approach that is the first time that we will have a national ban on price gouging, which is companies taking advantage of the desperation and need of the American consumer and jacking up prices without any consequence or accountability.
In Duluth, Georgia, former President Trump rallied supporters last night, Trump asking them to go out and vote.
With your help, 13 days from now, we're going to win Georgia. We're going to defeat Kamala Harris, and we are going to make America great again.
Meanwhile, Trump reacted after his chief of staff, retired 4-star General John Kelly, told the New York Times Trump is the definition of a fascist. Trump reacting on social media, calling Kelly a lowlife and bad general. Florida mother Megan Garcia issuing a stark warning for parents after she says an AI chatbot drove her 14-year-old son to suicide earlier this year. And now Megan Garcia has filed a lawsuit against the company that owned the chatbot, Character AI, saying they were reckless in offering teens access to the chatbots without safeguards. Garcia says she's still in shock that this could have happened to her son, Sewell.
I could never imagine that it was AI chatbot that has these very human-like qualities, that is able to respond and mimic human emotion.
Megan Garcia spoke to ABC's Nightline. France pledged to provide a $108 million package to support Lebanon at an international conference today. President Macron said massive aid is needed as the war between Hezbollah militants and Israel continues. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Oh, Michael Barr, I got bad news. I took the survey. Question 6. Do you want more Lisa Mateo? That was
Clearly, yes.
That was the question in the survey. Less Tom Keene, more Lisa Mateo. What would you like to hear from Bloomberg Radio? Help make shows like Bloomberg Surveillance even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast. Subscribe to Bloomberg Podcast there and click the link to our profile or community section to take the survey. Remember, more Lisa, less Tom, which is hosted by our partners, Material. Fill it out now at youtube.com/Bloomberg Podcast. Let me say that one more time because my future depends on it. youtube.com/Bloomberg Podcast.
By the way, check the Hell Yeah Lisa box, folks.
We've got that.
Yeah,
right, exactly.
that's been checked. And
It's
checked. Within the margin of error.
Oh,
it's like way outside. It's solid. And it's a serious survey, folks. We're humbled by the success we're having on the new digital product, Apple CarPlay, Sirius, Spotify, all of it. Paul's glued. He's sitting there on the Vespa tuned into Android Auto. And, it's this whole new digital distribution. We want to hear from you. Go to Bloomberg Podcast at YouTube and take that important survey for Lisa Mateo.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures getting a nice lift, and that's thanks to Tesla earnings. Even Tesla's Cybertruck sales turned a profit for the first time. Tesla shares up about 13%. Meanwhile, shares of Uber and Lyft, they are falling because Elon Musk said he plans to roll out ride sharing in Texas and California in 2025. So we have Uber and Lyft both down more than 2%. We have NASDAQ futures up 0.9%, 184 points. Dow futures down 0.1%, 45 points. S&P futures down 0.5%, 29 points. To the 2-year yield, 4.05%. That's down 3 basis points. The yield on the 10-year, 4.19%. That's down 5 basis points. Want to check back in with Boeing. They're still down more than 3%. Factory workers rejected that new labor contract. We move on to earnings. Keurig, Dr. Pepper reported adjusted earnings per share. Third quarter matched estimates. The Wall Street Journal also reporting that Keurig is set to buy energy drink maker Ghost for more than $1 billion. And finally, Harley-Davidson down 3%. Motorcycle shipments fell the latest quarter, lower overall demand, fewer sales of its highest margin bikes, and that
More
prompted
Vespa?
that outlook. Yes, Cut. That's what I'm saying. More Vespas. That is a Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Dressed now soberly and somber after hitting the ball deep to left field with Tesla. Dan Ives joins us now, Senior Equity Analyst at Wedbush Securities. Okay, I got a moonshot, Dan, on the bull market Tesla from 50 to 400. Down it goes, and it's been in a trading range. Was the announcement that you predicted last night, is that enough to reinvigorate a bull market in Tesla?
Oh, yeah. Look, I think Aaron Judge-like performance. I mean, the margins that we saw, that's a massive rebound. And it now starts the point where we're going to see margins spike back up. Price cuts have subsided. Yeah. But the outlook for next year, Tom, 20 or 30%, that's basically double what anyone expected.
Right.
The bull market in Tesla, I believe, has begun.
Okay, Dan, is this like regular season Aaron Judge or playoffs, division series, World Series Aaron Judge? Which Aaron Judge is this?
I think this is regular season GOAT Aaron Judge. I think this is Tesla getting their footing back, right? I mean, you know, you see a lot of negativity, obviously, coming out of Robotaxi Day. It's been a tough year. I think you're seeing a resurgence now. This is sort of the second chapter of this growth story playing out.
Hey, Dan, what do you think investors are really focusing on now when they think about Tesla? Is it the automotive gross margin? Is it the robo-taxi? Is it the AI angle that Elon's been trying to push for the last several quarters? Where is the focus for investors these days?
Yeah, Paul, I think in the near term, it's about margins. You need to see margins get back toward 20s. I mean, you can't have it mid-teens, and I think that's what we saw last night. Then it's really the delivery growth in China, which now just had their best quarter ever. But in terms of the longer-term growth, this is an AI story. Autonomous. Musk gave actually a lot of details on Cybercab and some other issues. Remember, a lot came out of Robotaxi bearish. We actually thought it was one of the top 3 events we've ever been at, in 25 years.
Yeah.
This is an autonomous AI play. Right. I believe it's the most undervalued AI play in the market.
For all of our listeners and viewers, Dan, seriously, this is important. Should we care about super secret speculation from some iPhone countable iSource on the Asian Pacific Rim, or should we focus on the fact I've had to buy 3 iPhone 16s in the last 2 weeks?
Yeah, look, Tom, you've talked about this for many years. I mean, and Paul, and I disagree with this analysis. And I think many have been wrong on Apple for really the last 4 or 5 years, trying to kind of do gymnastics to get negative. We've been in Asia 2 times in the last 8 weeks. I believe this will be the strongest iPhone year ever when it's all said and done. And I think trying to kind of like pick the spots, yell fire in a crowded theater, I get it, but I don't see it. I believe this is the start of a move toward a $300 stock in Apple.
So when you said you've been to Asia, and that's really important, Dan, because a lot of folks, I think rightfully so, kind of say one of the big drivers here, or the big swing issues for Apple is China. Not only is it 20% of their revenue, but it's obviously a huge part of their supply chain. How do you view China and Apple's positioning in China versus what are some, really strong local competitors?
Yeah, I mean, look, there's 100 million iPhones in China in a window of an upgrade opportunity. So just forget AI. When you look what's happening in China, I mean, I think that you're going to have China growth, even though we're off tough comps. It's going to be up anywhere from 18 to 25% over the next, call it 3-4 quarters. When that all plays out, that's how you're now going to get to street numbers that have to move higher for Apple, not lower. And services is going to be a huge driver there. And I think that's why we're looking at a $4 trillion market cap in Apple by early next year.
So talk to us about that services business, Dan, because that's something that,
the
ecosystem.
A lot of, yeah,
exactly.
Right where I wanted to go.
Exactly, Tom. I mean, a lot of, bulls hang their hat, the long-term hat on the services revenue. It's, roughly 20% of revenue. It's got nice margins to that revenue stream. How do you model that out, the services side of the Apple Store?
Yeah. If you model out services just as a separate business, you're talking about what's going to be $125-150 billion revenue stream next 3-4 years with double the gross margins of the hardware business. And I believe the valuation for the services business alone is $2 trillion valuation just for services.
Wow.
Well, this is key, and Dan, I was just over in Europe and I really saw an earful of the Apple ecosystem being used by all different classes of people as well. On a global basis, what is the margin of the ecosystem?
I mean, look, if you look today in terms of the margin of the ecosystem, it's
30 cents on the dollar.
They've essentially increased their margin profile 200 to 300 bips globally in terms of what they've been able to do at scale and scope. I think that even what we've seen in Europe, I think the biggest issue right now is when you think about AI,
right,
and you think about what they're driving, that is going to be a U.S. and essentially Asia and specifically China-centric story for the next 18 months. That are the core growth drivers for Apple.
What's your single best idea right now? Everybody's going to say you're bullish on everything, but what's the Dan Ives single best idea right now?
It's been the Messi of AI, Palantir, best pure play AI name out there. That continues to be our best idea, along, of course, with Apple, Microsoft, Tesla.
Talk to us about Palantir. A lot of people don't know what that is. So I'm going to ask you to just, what do they do and why is it your best idea?
Yeah, I mean, Palantir is what makes them so unique. When you think about AI, and you got Godfather of AI, Jensen, NVIDIA, the way that you actually build out use cases for enterprises is Palantir. So when we think about AI and you think about the AI revolution, they're a software company that essentially builds use cases on top of what NVIDIA, what the hyperscalers build. That's why we believe this is just, to me, it's one of the most unique names I've ever seen.
Dan Ives, thank you so much. Congratulations on Tesla. Must admit, victory lap there for Mr. Ives this morning. He is at Wedbush. My question is, when do they come out with a new car? And the answer's, I guess, a year out.
I don't know. I mean, Matt Miller will tell you, he's our resident car guru. He says, it's been 10 years. We haven't seen a new model here. And for most, you think about the typical car owner, they come out, or a car maker, they come out with every 4 or 5 years with a new updated version. So, but I don't know. I think I think it looks great. I think the models look great, and certainly the technology's been proven time and again.
You know what our music is today?
What is that?
August of 06. James Damon.
Yep.
With a Yankees uniform on, single-handedly eliminates the Red Sox.
Oh boy.
From the 2006 race. So we're playing 2006 music. This band, when I first heard it, I was talking to Eric about it, and when I heard the Killers the first time, I just assumed they were from England. And it's one of the great, great American stories. They're from the suburbs of Mormon Las Vegas, and they just crushed it in 2006. Good morning, Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, boy, we've got some smart people across the board this hour. George Sauervelos, he's global co-head of FX research at Deutsche Bank. We'll get his thoughts on the currency markets. Kate Moore, head of thematic strategy at BlackRock Global Allocation Team. That's a small investment firm that you might have heard of them. She's going to be chatting with us about these markets. And then in studio, Anastasia Amoroso, she's the chief investment strategist at iCapital. We'll get her market call here. Is she impressed by the earnings we're seeing so far coming out of corporate America? So we got a lot coming up in the next hour. But right now, let's kick it all off like we do with Lisa Mateo on the Bloomberg Business Flash. Lisa.
You got it. We got futures. Well, they're mixed right now. This is after Tesla's blowout results, posting its biggest quarterly profit more than a year. Tesla shares up 13%. That's giving a boost, though, to the tech sector. I want to point that out in particular. We have NASDAQ futures up 0.9%, 193 points. Dow futures down 0.1%, 47 points. S&P futures up 0.5% or 29 points. We have the 2-year yield 4.04%. That's down 3 basis points. The yield on the 10-year 4.19%. That's down 5 basis points. To commodities, we have Brent crude $75 a barrel, WTI crude $71 a barrel, spot gold at $2,738 an ounce. To earnings we go. Southwest Airlines third quarter profit more than doubled Wall Street estimates. We're also learning Southwest struck a deal with Elliott Investment Management. They will be adding 6 new board members. Shares were up earlier. Now they're down about 0.2%. Same for American Airlines. Those shares were higher earlier. Now down about 1%. It posted better than expected earnings, raised its full year guidance. Then we go to UPS. Their shares up more than 7%. Profits came in above estimates. A big part of that was thanks to an increase in revenue per piece. And finally, IBM shares down 4%, reported underwhelming sales. That is a Bloomberg Business Flash. Paul, over to you.
All right, Lisa Mateo, thank you so much. We appreciate it. Lisa, we sent Tom home. He's got the sniffles.
He sounded bad.
So he sounded a little bit under the weather. So I told him, I say, hey, go home, get a hot toddy, and then just get under the covers and, get relaxed, feel better coming back out of the weekend. So we're flying solo here. Maybe we'll get John Tucker in here, maybe, because he doesn't really work that hard.
John Tucker's doing everything around
here. Who knows what John Tucker does? But maybe we'll get him in here to chat with us for a little bit. But so anyway, we're flying solo here. Bloomberg Surveillance today is brought to you by Cohn Resnick Advisory Assurance Tax. Discover optimization strategies that are helping CFOs make their finance function more competitive and resilient. Talk to Cohn Resnick's advisors today. When I talk currencies, my first question always is there a meaningful bear case for the U.S. dollar? I don't see it. Yes, we have periods every once in a while where the dollar kind of fades a little bit. Maybe the Fed's stepping up its interest rate cuts. But is there really a bear case for the dollar? Maybe our next guest has got some thoughts there. George Sauervelos, he's global head of FX research for Deutsche Bank. He joins us. So, George, again, what's your view here of the U.S. dollar? We do have a Federal Reserve that's cutting, but I've also got a Bank of England that's cutting. I got a European Central Bank that's cutting. How do you kind of position that?
Good morning, Paul. I think the way you phrased it is absolutely correct, that the Fed is cutting rates, but currencies are always a relative game, so to speak. And one of the reasons why we're pushing back against the narrative that the dollar would continue weakening in August, September, is that we saw every other central bank cutting as well. And when you looked at what the market was pricing in terms of relative interest rate differentials, it was essentially saying the Fed would go back into the middle of the pack. The Fed would cut more than everywhere else. And we disagreed with that. We've had a view of US exceptionalism, so to speak, both in terms of growth and by extension monetary policy. And as long as everyone else is cutting more and the US yields remain at the top of the list, it's very hard to see the dollar weaken. So I think now the dollar is much closer to fair value compared to where it was a few months ago. But thinking ahead, really the big driver is going to be the outcome of the US election.
So frame out for the U.S. election. Nobody obviously can call the election. We just had David Gura in here from the Big Take podcast, and the Bloomberg Morning Consult poll says dead heat. So how does the currency market kind of think about this election, George?
Well, as you say, it's a very close call. And I think that makes it very difficult to argue that the market is fully pricing one outcome or the other, which could mean you could get large reactions either way. But the way we think about it is always in terms of policy. What would the election do to policy? And from a currency market perspective, there are two key variables. Number one, tariffs, and number two, fiscal policy. Now, you asked at the beginning of our conversation, what is the bear case for the dollar? Well, I think there is one scenario where the dollar would weaken, and that would be a situation where fiscal policy is tightening materially. If you get a tightening of fiscal policy, for example, under a divided government situation where the previous tax cuts expire, you effectively get an increase in taxation. That would lead to slower U.S. growth. That would lead to more aggressive Fed easing, and that would be the bearish case for the dollar. Now, from our perspective, we see that as the lowest probability outcome. Even in a divided government, we see the likelihood is these tax cuts being extended or replaced by potentially other fiscal easing measures. So on the fiscal side, we see the risks are still skewed towards yet more fiscal easing, which implies more U.S. growth, tighter Fed. And obviously, the critical additional question is what happens with tariffs. And if you have a situation where fiscal policy is easing and you're getting tariffs at the same time, which will disproportionately hurt growth outside of the U.S., lead to more cuts, for example, from the ECB, that would be the perfect scenario for a dollar rally. And the way we framed it is, if you're in a situation where you get more fiscal easing and on top tariffs, it's very possible the euro could go down as low as parity to the dollar.
Hey, George, this is John Tucker. Tom unfortunately had to leave, so it falls upon me to ask you an incomprehensible question at this point. Did rate differentials sort of take a back seat right now?
So it's an interesting question because at the moment they've been at the driving seat. If you look at how the dollar's behaved throughout the last 1 or 2 years, it's all been dominated by this constant repricing of the Fed versus the rest of the world. You've been through these periods where the market's expecting dovish Fed outcomes, the dollar weakens. This was the case in December of last year, again in September. But what we see is once those dovish outcomes don't get realized, the rate differential widens again, the dollar rebounds. So it's absolutely been at the front seat. I think it will be very, very relevant as well over the coming year in terms of how the Fed behaves versus the rest of the world, especially in a world of tariffs, will be a key determinant of the dollar. But what we're likely to see...
that's a good point. I don't mean to interrupt, but how does the Fed act when it comes to tariffs if Tariff Man does return to the White House?
So it's a critical question, and I would say it depends on, as an economist by training, I would say it depends on what also happens to fiscal policy. If you're in a situation where the fiscal stance is expanding and you're seeing tariffs on top, but what's going on, remember, tariffs are essentially a negative supply shock in the form of a tax. So all else constant, tariffs would be negative for growth. But if you're in a situation where you have the fiscal side expanding, so you have positive growth, but tariffs cause inflation, you have positive growth, high inflation, the net impact of that will be for the Fed to be more hawkish. The impact on the rest of the world, however, will be the opposite. We're going to see the ECB be more dovish because tariffs are essentially a tax on the rest of the world as well, and also disinflationary. So it's the mix of fiscal and tariffs that matter. But to go back to your point, what we saw during your question around, is it just the rate differential? What we saw during the first trade war in 2018 and 19 is that tariffs themselves had a bigger than expected impact on FX over and above the relative interest rate stance. And that's because tariffs would tend to add the risk premium to the market. The market becomes more uncertain. And historically, when uncertainty goes up, when global uncertainty goes up, the dollar tends to rally.
George, thanks so much for joining us. Really appreciate getting a few minutes of your time. George Saravelos, he's the global head of FX research at Deutsche Bank. Appreciate getting some of his time here with our news in New York City.
Thank you very much, Paul, John, and Lisa. The presidential race between Donald Trump and Kamala Harris, it can't be much tighter. Bloomberg's Amy Morris has the latest Bloomberg News Morning Consult poll in Washington.
Donald Trump and Kamala Harris are now in a statistical tie among likely voters in each of the 7 swing states. Each candidate now has 49% support among likely voters, with a margin of error of 1 percentage point. So to move the needle, Trump's campaign is aiming to mobilize voters who haven't typically turned out. Harris has recently looked to fire up women and pick off moderate Republicans who aren't Trump devotees. Trump has an advantage on the economy. 36% of likely voters called the economy the single most important issue determining their vote. And Harris scores higher on mental fitness, honesty, and compassion. In Washington, Amy Morris, Bloomberg Radio.
UNICEF warns of a new risk for children in conflict zones. They say the vast majority of the more than 540 new cases last year of polio were in conflict-affected or otherwise vulnerable countries, and immunization levels there have dropped from 75 to 70%, well below the 95% needed for community immunity. AAA says automatic emergency braking systems on new vehicles are up 50% better than reducing forward crashes at up to 35 miles per hour compared to vehicles from 2017. Greg Brannon is AAA's Director of Automotive Engineering Research.
We're very excited that the new regulations that have just been posted include much higher speed scenarios. In fact, the vehicles will need to automatically brake and completely avoid hitting a target at speeds up to 50 miles an hour. And then with the combination of the driver engaging the brake and the automatic system, completely avoid a crash up to 62 miles an hour.
The AAA's Greg Brannon says, though, current automatic emergency braking systems in vehicles are not at all effective at night. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, John, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. All right, Lisa, this is what happened here. We sent Tom Keene home because he's a little under the weather. He's our franchise player, so we sent him get well. John Tucker's sitting on the 6th floor link, which, folks, is a place where we get our, our food and coffee and sodas and just kind of kick back and relax. Everybody gathers there, and there's sofas and everything. John was kicking back with a cafe latte. He had a croissant doing the New York Times crossword puzzle because he really doesn't contribute a lot here. And somebody from management tapped him on the shoulder and said, time to go to work.
We need you.
We need you. So we went for the big, strong right-hander out of the bullpen, and here he is, John Tucker.
He rushed over.
Substituting for Tom Keene, Manny Moda.
Yeah, exactly.
It's not because, I bring any talent to it. It's I'm just the only one who was available.
Well, I think they probably looked for Mike McKee first because he's kind of a utility player.
They looked for about 15 other people first.
Couldn't find Mike McKee. He's out there on assignment somewhere. So we got John Tucker sitting in this for the next till 10 o'clock. So we're in good hands, everybody. Looking at these futures here, S&P up 25, the Dow off about 45 points. The NASDAQ is where the action is. How about that? Up 0.9%. So we'll keep an eye on that. Coming up, we're going to chat with Kate Moore. She's head of thematic strategy at BlackRock Global Allocation Team. She's one of our favorite guests. She knows what's going on out there. BlackRock, they have a couple dollars under management, so they see things as well. I'm calling out WTI crude oil for Alex Steele. It is up a little bit here today, $71.25. This is Bloomberg. Good morning.
headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures mixed ahead of nearly 50 companies opening their books today. I want to get to some of them right now. We'll start with Honeywell, narrowed its adjusted earnings per share guidance for the full year, but shares, though, they're down a little bit more than 1%. T-Mobile, they're up 2%. Reported third quarter results beat expectations, raised its full year subscriber forecast. Let's get to earnings. We get to NASDAQ futures, up 0.9%, 190 points. We have Dow futures, little change, down about 36 points. S&P futures up 0.5% or 29 points. We have the 2-year yield at 4.04%. That's down 3 basis points. The yield on the 10-year 4.19%. That's down 5 basis points. Want to check in also with shares of Boeing. They're still down about 2%. Factory workers rejected that new labor contract. And also McDonald's shares on the mend after falling nearly 5% yesterday. Shares now up about 0.5% after that deadly E. coli outbreak at some of its restaurants. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. All right, we're just starting to get into the teeth of earnings. Seems pretty good so far. I mean, the big banks had some solid numbers. I don't know. I think that kind of set the tone here. But what do earnings mean for this market? How important are they? Being a former sell-side analyst, I think earnings are important. Let's check in with somebody who does this stuff for a living. Kate Moore, she's head of thematic strategy and global allocation at a little firm called BlackRock. You might have heard of it. Kate, thanks so much for joining us here. Again, we're kind of just maybe a third of the way into the earnings season here. What have you seen? Is it from the earnings of corporate America? Is it enough to support this market, in your opinion?
Yeah, I think it's been a pretty good start to the season. And look, we know this. We were kind of like working on a lower bar than we've had in the past. This happens a lot, where you were a sell-side analyst, you get it. Sell-side analysts are cutting their forecasts going into the start of reporting. And that happened once again this season. And companies are handily beating the estimates that have been expected. The big thing I'm watching, though, is not the results from the third quarter, but I'm maniacally focused on the guidance companies are giving for the fourth quarter and for 2025. And I'll tell you why. The expectations for growth year over year in terms of earnings for fourth quarter and for 2025 look pretty lofty as we get to a more extended part in the economic cycle. Now, that doesn't mean that we won't hit them. And it's very possible. I always have faith. I always say don't bet against the U.S. Corporate dynamism and their ability to control costs and to deliver on the bottom line. Corporate management teams have become exceptionally strong at that over the last 15 years post-GFC. But I do want us to be conscious of the fact that there are kind of placeholder numbers for earnings in some of these areas. And companies need to affirm their guidance. They need to make us feel confident that they can hit those numbers, even though the uncertainty factor around politics and geopolitics and growth is quite high right now.
Well, what's that guidance predicated on at this point?
Yeah, the guidance is based on kind of the regular run rate for business, assuming no shocks. The one thing we do see in the second half of an election year, I'm sure many guests have talked about this before, is a slowdown in terms of overall activity. Now, we don't have consumers hitting the brakes and we don't have companies stopping what they're doing, but incremental purchases or incremental investment tends to slow down a little bit as people wait to see if there's a change in policy expected in the next year. So, we're watching this play out a little bit. Companies are kind of dodging the question of the elections, as they should, stay focused on their core business. But they're probably not going to engage in new CapEx projects, or consumers may be holding off on big purchases if they think there's a chance that their tax burden may change in 25 and onwards.
So, Kate, where do we focus here? I can be lazy and just say I'm going to hang out in the Mag 7. Or maybe I could kind of sharpen my pencil and try to find some value outside of those 7, 8, 9 names. Where do you see opportunities here?
I don't want us to hate on the Mag 7. Let's be clear. Most of the Mag 7, they deserve the leadership role that they are sitting in. They are exceptionally strong companies with huge free cash generation and also in the fastest moving and fast and growing parts of the technology space for the large part. So I don't want us to ignore these companies just because they've been leaders. Don't hate on them. What I will say is there are opportunities outside of the tech and AI leadership that I think are really interesting. I've highlighted a couple in the past around cybersecurity. I think that's an area where spend will continue to increase. I think there's growing opportunity across the financials, regardless of the outcome of the election. And I think there's opportunity to be selective across the consumer space. Look, there was a lot of hand-wringing. People were stressed out about the fact that the consumer may or may not have been trading down at different parts this year. But I think a value-oriented consumer is the norm, not the exception. We had just gotten used to a consumer that bought everything. So I see opportunities across consumer for companies that have strong brands and who offer really differentiated products.
Can I just put everything into the S&P 500 at this point?
I mean, I love the index, but I'm an active investor, and I think I
know it's a bad question for you, but
Yeah. Look, the valuation, oh my gosh, I have to tell you, I get a little frustrated here with people saying, hey, it's too late to buy the market because multiples are at the top end of their historic range. I'm being really gentle with the way I say it. Most people say, oh my gosh, the market's really expensive. That's not necessarily true. They forget that what makes up the market today is different than what made up the market 5, 10, 15, or 20 years ago. And if you're comparing the multiple on the S&P today to a historic multiple, it's an apples to orange. You are comparing these high growth, high cash generative technology companies against what had been larger concentrations in sort of banks and industrials in the past. So that's argument number one. And the second is, and this is really important, I think we can command higher multiples in the market because of the information availability and how fast that's priced into the opportunity. In the past, there was a huge uncertainty factor. And now with all the tools that we use, third-party data, AI, and are able to triangulate the trajectory of growth for many of these companies, we're able to assign a different multiple. So I don't think past multiples should be our guiding star here. I think we should say we're trading at higher multiples because we have a better market.
Kate, you guys at BlackRock are truly a global financial institution. As you think about the investment opportunities globally, where are you guys these days, maybe U.S. versus non-U.S.? Are there certain parts of the world that are more attractive to you?
Yeah, we've had a pretty strong allocation to Japan over the course of this year. Encouraged by some, both corporate and policy changes. We faded a little bit of that more recently. And, we continue to feel like the U.S. is going to be the best region overall. In Europe, this is a tough one. People always say the market is cheap. Well, the market is cheap because the companies that are bringing down the multiple for European equities are frankly not strong growers. I mean, the companies that are kind of the comparable companies to the U.S. leadership are trading at similar and sometimes premium multiples because everyone has been crowding into them. So we're more stock selectors in Europe than we are just buying the market. And I don't see Europe outperforming. The other place I'd say is we've been adding some exposure to India. And that's not a tactical call into the end of the year. That's a medium term. I think many of us know this story, the strong demographics, the strong government support for consumption going forward. The innovation, the education of the workforce. These are all great long-term themes. And we're continuing to find some interesting consumer companies, particularly after a little bit of a back off in stock prices that we want to hold for the medium term. So that's a place we're adding.
Kate, thanks so much for joining us. Always appreciate getting a few minutes of your time. Kate Moore, she's the head of thematic strategy, global allocation at BlackRock, and she is a proud graduate of the University of Virginia.
Kate's
Wahoo,
also
wah.
a dog fanatic. I didn't see a Gura in the background.
Oh, she has? Oh, really?
Yeah,
Okay.
beautiful dog.
You're a dog person too, right?
I was.
You were?
I'm in the
I
market
forgot.
for a new one.
Wah.
We don't want to get into that.
What do you want to get?
I have no idea. One that doesn't shed.
One that
hopefully.
doesn't shed. Okay. Well, I guess there's a few
That's
there.
a tall order.
All right. I've never once had a dog in my life. But that may be changing, so I'm told.
Really?
That may be changing, so I'm told, so we'll have to see. Futures red and green on the screen here. S&P 500 up 28 points, Dow down 50. The NASDAQ up 185 points. We'll keep an eye on that. 10-year Treasuries 4.20%, off 4 basis points. I'm going to call out Bitcoin. Why not? It's up 67,300 on Bitcoin. This is Bloomberg.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures mixed as investors continue to watch the pace of Federal Reserve easing. Today, we have some more economic data for them to sift through. We are moments away from initial jobless claims for last week. Before we get to that, while we wait that, let's get to futures. NASDAQ futures up 0.9%, 193 points. Dow futures down 0.1%, and we have S&P futures up 0.5%. All right, the numbers coming in for initial jobless claims. The survey was for 242,000, coming in a bit lower, 227,000. The prior, 241,000. That was revised up to 242,000. So that's the difference there. As far as any changes, not too much right now. It's still the same. NASDAQ futures up 0.9%. Dow futures down 0.1%. S&P futures up about 0.4%. We have the 2-year yield, 4.05%. That's down 2 basis points. The yield on the 10-year, 4.20%, and that's down 4 basis points. Let's get to the stock 600. Right now, I want to check in with him. It's up about 0.4%, but the reason why, about a tenth of the entire stock 600 index set to report today. Getting to some of them, we'll start with Barclays, up more than 3% in London, posted a surprise increase in fixed income trading. You have Unilever up 3% in London. Revenue increased 4.5% the third quarter, beating estimates. French automaker Renault, you have them up more than 6% in Paris, confirmed full-year guidance. It expects to benefit from their new models. And finally, looks like those wealthy consumers love their Birkin bags. Hermes right now. Shares up 1.5% in Paris. Sales topped estimates in the third quarter. That is your Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. Economic indicators, they are brought to you today by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and strategy. You see the initial jobless claims, John, came in at 227,000 versus a consensus of 242,000. Last month was 241,000. The labor market's solid, dude.
But I gotta wonder at this point, to what extent are the markets hanging on every little data point, or are we kind of dismissing that for the time being?
Let's talk to somebody who actually does this stuff for a living. We have somebody in our studio who's actually pretty smart on all this stuff, this investing thing. I don't know. Anastasia Amoroso, she joins us. She's a chief investment strategist at iCapital. Anastasia, we'll get to the markets overall. I want to talk to you about what has been a little bit different tack. The private market. I just did a read for Commonwealth. We go down, we talk to these Commonwealth folks, these advisors. They're talking about private equity, private credit, hedge funds, this alternative investments. What do you guys see at iCapital in terms of the demand for private investments?
Right. Well, we obviously see a very big pickup in demand for private investments. And I think that's been the story of ramping up over the last 10 years. That's how long iCapital has been around, or a little bit longer. But really in the last 3 or 4 years since I've joined, I've seen this immense pickup in demand for alternatives. And I think part of that has been because private investors have been looking at what institutions have been making in, let's say, private equity buyout strategies or private credit, and they wanted to expand their portfolios to that. Part of the interest also, I think, picked up when back in 2022, you saw the 60-40 portfolio that was down 17%, but a lot of these private market strategies held up really well and in some cases delivered really strong positive returns. So I see an immense demand for alternatives, and we do actually have quarterly flows that we're able to share that we see on our platform where private clients are allocating. And private credit has definitely been an area of focus, an area of interest. It's about 37% of the flows that we see on the platform. It's a little bit lower than last quarter, but it's still one trend, which is an uptrend that we're seeing in private credit. Private equity is interesting because it's about 47% of the flows that we see on the platform, and that is actually a sizable pickup from last quarter. So that tells me that investors are seeing the valuation environment stabilize. These questions about, well, don't private markets, don't properly adjust valuations, I think those questions are now behind us, and investors are feeling comfortable to step into things like private credit. The other thing I would mention, Paul, infrastructure investing has really been attracting a lot of interest. When we look at the flows, we saw initially all the real asset flows go into real estate, but that number has started to pare back as infrastructure investing has picked up. So I would say tremendous interest. The question is not why alternatives, but how, which ones, and how much.
Does the trajectory suggest that private credit will exceed private equity at some point?
I mean, I think it's on that trajectory, but I really, can see the two being neck and neck, because the truth is they serve a different purpose in the portfolio. And if you look at public equities and you think about forward-looking returns, maybe they're a little bit lower than we've seen in the last, 10 some years. So that's why you go to private equity. That's your potential for extra returns. And when you think about private credit, that's really your potential for extra income in the portfolio. So I think the two serve very different purposes, but investors are increasingly seeing them as an extension of what can I do in equities and what can I do in credit.
Who are those investors? It's not mom and pop.
Well, maybe not mom and pop just yet, but I will say, look, that the typical allocation for institutions is about 40%, maybe in some cases 50%. The typical allocation for an ultra high net worth investors, about 15%. But when you look at financial advisors,
15% into alternatives?
15%.
Gotcha.
Yes, but when you look at some of the smaller investors, they may work with an RIA advisor that you were mentioning, the allocations tend to be much smaller. And the stats that I see is that 36% of advisors, those RIA advisors, allocate to alternatives. And if they do, that percentage tends to be something like 5%. So there's a tremendous amount of interest and potential for future growth in this adoption of alternatives, because most advisors we talk to and survey do see those allocations rising. And, John, it's not yet every single investor that has alternatives in their portfolio, but that's something that we're really focused on at iCapital is how can you bring down the minimums? How can you reduce the friction? How can you build structures that are suitable for individual investors?
So are you concerned about the rising allocation to alternatives because they are higher risk because of in part due to the lower liquidity? Are you concerned about that? How do you talk about that with your iCapital clients?
Well, I would say there are different kinds of risks. And, there is a mark-to-market risk, and there's a getting whipsawed in the markets based on how many rate cuts we're projecting or not. And from that standpoint, I would actually argue the public markets may be riskier because there's this sentiment factor. There's this technical dislocation that's very much possible in public markets on a daily basis. So from that perspective, I would argue some of the alternatives that don't have to get mark-to-market every single day may actually be a better risk-adjusted return, part of your portfolio. But you bring up a good point, of course, which is the liquidity. And, yes, individual investor does need liquidity. Do they need 100% liquidity? No, but are they able to take some illiquidity risk? Probably yes. So that's why we don't see the allocations going to 40 or 50% for individuals as they are for institutions. But up to a 20% allocation, I think that's how you square that risk of having the liquidity, but at the same time giving yourself potential for higher income, for higher potential returns, and also diversification.
Does the word private mean opaque when it comes to investing and just about everything?
Look, sometimes that is the perception, but I wouldn't say that's the reality. And, private means it doesn't get traded on a day-to-day basis. Private, in the case of private credit, for example, means that most of these are buy and hold long-term securities that are meant to be held until maturity. And yes, there's this perception that because, you can't see the market every single day, there's lack of transparency. But the truth is that these assets do get valued on a quarterly basis. These assets are audited on an annual basis. And, one of the things that we're really focused on iCapital is bringing that transparency by putting those performance numbers in front of investors so they're readily able to see them. And look, they're always going to be with a lag because that's just the mechanics of private markets. You have to get the valuations in, you have to get the reporting in. But what I can say over the last 15 years, if you look at the 60-40 portfolio relative to all the different private market strategies, most of those private market strategies have handedly outperformed the 60-40. For example, buyout, growth equity delivering returns of 14 or 15%, private credit about 9%. So it's been a very compelling place to be.
Tying in people looking for higher returns in the alternative space, I'm going to tie that in with a report we came out of Goldman Sachs earlier this week where they were forecasting much lower returns for public equity markets over the next decade versus this prior decade. Maybe low single digits they were talking about.
3%.
What did you make of that?
Look, there's a lot of variables that go into that. And in fact, the report cites 5 different variables. But the thing about that is they're most likely treated as static variables versus something that's going to evolve. And of course, on the surface, it makes a lot of sense that when equities are trading at 22 times multiple, if that's your starting point, the forward-looking returns mechanically will be lower, based on that. There's also this concern about the concentration risk in the Max 7 companies that maybe are not going to be able to deliver. Look, I do think returns returns because of valuations and equities should be somewhat lower than they have been in the past. But valuation aside, the U.S. economy is most likely still going to continue to grow. It's most likely still going to continue to innovate. So I think if companies deliver that 7 to 10% earnings growth, despite valuations, which maybe bring the overall returns down a little bit, I still think we would be towards the top of the range, which is about 7%.
Anastasia, thank you so much for joining us. Anastasia Amoroso, she's a chief investment strategist at iCapital, joining us here in our Bloomberg Interactive Broker studio. Bloomberg Surveillance this morning is brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit BNY.com. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, John, Lisa. Reaction from Vice President Kamala Harris after Donald Trump's longest-serving chief of staff called the former president a fascist. Retired four-star General John Kelly spoke to the New York Times, and Harris was asked at a CNN town hall if she agrees with Kelly.
Yes, I do. And I also believe that the people who know him best on this subject should be trusted.
Trump reacting on social media, calling Kelly a lowlife and a bad general. Meanwhile, Trump campaigned in Georgia last night.
Jimmy Carter is a happy man. You saw him the other day voting. I think he voted for me.
And the presidential race between Trump and Harris is extremely close. The candidates are statistically tied among likely voters in each of the 7 swing states in the Bloomberg News Morning Consult poll. Bloomberg's Kevin Whitelaw.
This is settled into the exact kind of election everyone had always thought it would be, which is a 50-50 election in the states where that are going to end up deciding it, and there's sort of no way around those dynamics, and so it's going to very much come down to the voter enthusiasm and the ability of either candidate to turn out their supporters on election day.
Bloomberg's Kevin Whitelaw. Secretary of State Antony Blinken just announced an additional $135 million in U.S. aid to the Palestinians during his Mideast visit. Meanwhile, France pledged to provide a $108 million package to support Lebanon at an international conference today. President Macron said massive aid is needed as war between Hezbollah militants and Israel continues. An Arizona teenager is awaiting trial in connection with what authorities say was a thwarted ISIS-inspired plot against the Phoenix Pride Parade this past Sunday. Authorities say 17-year-old Marvin J-Lo planned to explode a remote-controlled device. He will stand trial as an adult on 2 charges. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, John, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Hey, John, we had Dan Ives on earlier this morning on surveillance.
Let me guess, he's bullish on tech.
He's bullish on tech. Tom asked him for his best pick right now. He said Palantir Technologies, which is up like 150% this year, something crazy. And one of the most read articles on the Bloomberg terminal today, Palantir's AI-driven rally has gone much too far for Wall Street. A lot of analysts are starting to say, maybe we're a little bit over our skis here. Not Dan Ives. He puts that as his top pick.
I asked him about the Cybertrucks earlier. I can't get a read on who's buying the Cybertruck from Tesla.
No, and I'll tell you, it is an unusual looking vehicle to say the same.
We'll leave it at that.
We'll leave it at that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures getting a nice lift. That was thanks to Tesla earnings. Even Tesla's Cybertruck that John Tucker just loves, those sales turned a profit for the first time. Tesla up about 14%. Meanwhile, shares of Uber, Lyft, they are falling. Elon Musk said he plans to roll out ride sharing in Texas and California in 2025. So now we have Uber and Lyft both down more than 2%. Right now, NASDAQ futures, let's get to it. Up 0.9%, 182 points. Dow futures down 0.1%. 41 points. S&P futures up 0.4%, 27 points. The 2-year yield 4.05%. That's down 2 basis points. A yield on the 10-year 4.22%, and that's down 2 basis points. Check back in with Boeing. Their shares down more than 2%. Factory workers rejected that new labor contract. And back to earnings. Keurig Dr. Pepper, its U.S. refreshment business driving growth, but it had weaker than expected sales and profit for its coffee division. Shares down more than 3%. Keurig also said it's set to buy energy drink maker Ghost for more than $1 billion. Finally, Harley-Davidson down 2%. Motorcycle shipments fell in the last quarter. That is your Bloomberg Business Flash. Paul and John.
All right, so I'm on the tour bus in Ireland,
Okay.
and the tour guide says, we're talking about his motorcycle, touring around Europe in his motorcycle. He said, all right, everybody on the tour bus, who's got a bike? 3 or 4 people. I raised my hand.
You did not.
I did raise my hand because
not a
I've got
bike.
my Vespa.
Wait a second.
not
That does not count. I'm sorry.
So everybody had to say what they drive. He's got a Harley Davidson this, a BMW 1600 this. I said Vespa, Piaggio, baby. 50 cc's of
they all laugh.
unbridled power. So they did laugh at that. All right, folks. Lisa Mateo, thank you so much. We appreciate it. John Tucker sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. INGO on the Bloomberg terminal. That gives you the Bloomberg Index browser. You can see kind of where the bond markets are trading all around the world. The U.S. mortgage-backed security market, that's an index that we own at Bloomberg. We own all these indexes. Up 1.87% this year. So actually got some green on the screen here for the fixed income people because they've been really underperforming over the last couple of years. So I want to talk to somebody about this mortgage-backed security market. It's like we got rates coming down. I don't know what that means for the mortgage market. I'm trying to refinance my mortgage on the Jersey Shore compound, not having any luck at the moment. Skylar Weinand, he joins us. Skylar Weinand. He's the CIO of iCapital. He's in the Tom Keene seat right now, wearing a stellar bow tie. It's like Tom never left. So,
and I guarantee you'll be sick in about 2 days.
No, you'll be fine. You'll be fine. Skylar, talk to us about the mortgage-backed security market, the asset-backed securities market. How does it perform in a declining rate environment?
It performs great right now,
Okay.
Because most of the mortgage market is trading under par. You have a plethora of mortgage backs that were issued in 2000 through today. Almost everything is trading below par. So we really want these borrowers to potentially refinance. You know, the United States is unique in the 30-year mortgage market. You know, it's a pretty interesting story that mortgages have only been legal. They've only been around for about 110 years. Prior to that, banks weren't allowed to own mortgage backs. Okay. So what created Silicon Valley Bank going under, what created a lot of bank stress, banks going out and buying these mortgages in 2020, 2021, now those bonds are trading at 80, 82 cents on the dollar. And the government actually owns about 80% of these. Okay. So you have this huge opportunity versus corporates or treasuries or munis, because these borrowers have the ability to refinance when rates drop. So when you buy that bond at 80 or 85 cents on the dollar and a borrower refinances, you get paid back par.
Mm-hmm.
It's called convexity or asymmetry.
I heard
okay.
that.
So relative to buying a corporate bond, and that corporate might only be trading at 70 basis points over treasuries, mortgages, the par coupon mortgage right now is trading at 155 over US treasuries. So if you're thinking about, hey, crap, I missed my opportunity to put money to work at 5, you can actually go buy mortgage backs right now at almost 5.75% yield.
Well, when they refinance, that's a risk, though. I'm going to have to find a new place, a new home for my money, right?
It's a good risk, right? Because you're getting paid back. So the old adage in mortgage backs is, oh, there's prepayment risk. Now we call it prepayment opportunity. Because oh yeah, you own this at 80 or 85 cents on the dollar. Worst case scenario, you get paid back at par. That's a yield of, theoretically 10 to 20%. Yeah, you will have to there is quote unquote reinvestment risk at that point. But you add it all up and your total return is going to be much better than what you might get in corporates or treasuries.
So where specifically are you finding the best value today in your markets?
Yeah, we love. We're one of the biggest players in legacy mortgage bonds. So
What's
these
a
are
legacy mortgage bond?
These are bonds that were These are bonds that created the GFC.
Okay.
Bonds issued in 2007 and earlier, which is still about a $175 billion universe. You'd be surprised. These borrowers have 65% equity in their home.
Mm-hmm.
They're still paying a 5.25% coupon mortgage. Okay. So you have this huge swath of mortgage backs out there that are trading at 7 to 8% yield, and they're trading at 50 to 80 cents on the dollar. So that's first of all. Second of all, we really like floating rate paper. Okay, if you look at the shape of the curve, okay, I call it diving into the duration pool. The belly of the curve is still very.
That's 5
deep.
to 7 years.
5 to 7 year
Okay.
is only trading at 450, or call it 4 right now. But you can still get 4 3/4 or 5% on the front end. So if you go out and you buy an agency government guaranteed floating rate bond, you're getting that 4 3/4 plus 100 to 150 basis points. So you're getting almost 6% yield on a government guaranteed Fannie, Freddie, Ginnie floating rate bond. So we're kind of marrying up, stay on the front end of the curve, stay short based on the shape of the curve with, hey, we want some significant upside. If rates do drop, those borrowers will prepay.
As Paul decides whether or not to pull the trigger on a refi, should he be following, say, the benchmark, the 10-year, or is it demand that drives this? What is it? Because I don't agree that it's necessarily 10-year rates that are going to drive or dictate the mortgage market.
It's a combination of 5 to 10s. That's half of the equation, or I would say most of the, call it 2/3 of the equation. The other part of the equation is demand. So banks have left the building. The federal government have left the building.
The banks have left the building in terms of
buying mortgage backs.
Buying mortgage backs.
Banks and the federal government are half of the buyer base of mortgage backs. Okay. Predominantly what's left are mutual funds, insurance companies, total return funds, and frankly, they're on their way out as well. So the demand for mortgage backs is faint, and so the spread is at crisis levels. Okay, so agency government guaranteed paper at 155 basis points over U.S. Treasuries, whereas corporates are only at 80. And 50% of the corporate index is triple B. So you're getting really, really high quality paper versus okay quality paper at almost twice the spread. But to answer your question, when should I refinance? When should I look at this? It's primarily treasuries, okay? And obviously, we mortgage rates almost hit 5 just about a month ago. Okay, they were at 611. Today they're back up to about 660. Okay,
I'm looking at it right here.
So unless you think there's going to be some type of calamity where for some reason 10-year rates drop back down to like 350, you may not be able to refinance at a 5 handle for a while.
So, Paul, you're waiting for calamity.
Waiting for calamity. It's just not going to happen.
Right.
I'm at 6%. I felt like a chump for a long time, but then rates went up to 7 and change. So who knows? So, but I'm firmly ensconced in the Jersey Shore compound. It's just
at 325. I'll be buried in the basement.
Yes, John Tucker, Alex Steele, 2 3/4, I think. So just some crazy numbers. Skylar, thanks. I don't know what you do for a living, but it sounds really, really attractive. Skylar Wynand, he's the CIO of Equity Capital. He's based down there in Dallas, Texas, along with everybody else, by the way. It's like the new Wall Street down there. I don't know what's going on. It used to be the Crescent Court was it. And then now it's everything else. All right, Skylar, thanks so much for joining us here. Looking at these markets, futures here, still mixed. S&P 500, it's up about 26 points. The Dow's off 46. The NASDAQ is up 180 points. 10-year Treasury yield off a little bit today, about 4.21%. We're going to have more coming up. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Craig Brandon. He's in our studio here. He's co-head of Municipal and portfolio manager at Advance. That's part of the Morgan Stanley complex right now. We'll talk municipal bonds with him. Nadia Calvino, president of EIB, on the IMF meetings in D.C. this week and how Europe is supporting Ukraine. So we can talk a little bit of global geopolitics here as well. John Hurdle, executive chairman at Hurdle Callahan & Company, on S&P 500 valuations and where we go with this market. He's also going to be in studio. Johnny Damon, former Major League Baseball player, on his new business venture and a World Series preview. Yanks in 7, that's what I'm calling, for those who care. I'm just throwing it out there.
I want to know if he thinks that.
I know, exactly. Let's see what he thinks. All right, so we got a lot coming up in this hour. Tom Keene's home nursing the sniffles, but he'll be back soon enough. Don't worry about that. Let's go to Lisa Mateo right now and get a Bloomberg Business Flash.
You got it. We've got NASDAQ futures leading the charge this morning. This is after Tesla's blowout results, posting its biggest quarterly profit in more than a year. Tesla shares now up 14%. That's giving a boost to the tech sector. Let's get to it. NASDAQ futures up 0.8%, 168 points. We have S&P futures up 0.4%, 25 points. Dow futures, a little change, down about 39 points. The 2-year yield, 4.05%. That's down 2 basis points. The yield on the 10-year, 4.21%. That's down 3 basis points. To currencies, haven't hit that yet. Dollar weaker, Japanese yen stronger, 151.97 against the dollar. Euro, British pound stronger. Bitcoin, Tom's not here, got to point it out, up 1% at around 67,000. To earnings we go. Southwest Airlines, third quarter profit more than double Wall Street's estimates. We're also learning Southwest, it struck a deal with Elliott Investment Management. They're adding 6 new board members. And shares were up earlier. Now they're down about 1%. Over to American Airlines. Shares were higher earlier. Right now, American, well, it's up about 0.2%. So it was lower, now higher. They've been back and forth all morning after it posted better than expected earnings, raised its full year guidance. UPS up more than 9%. Profits came in above estimates. A big part of that thanks to an increase in revenue per piece. We have light in the studio. It came
yes,
to
we
me
do.
all at once. That is your Bloomberg Business Flash. Paul and John.
I was complaining. You just didn't look the same.
Oh, well, thank you.
Your glow has dissipated.
Well, she's a
It's
TV
back.
She's a TV star. We're just hacks over here. Lisa Mateo, thank you so much. We appreciate it. John Tucker sitting in for Tom Keene here. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So head over to youtube.com. That's the internet, John, and search Bloomberg Podcast, and that's where you'll find us. All right. On the Bloomberg Intelligence program from 10 to 12 that I co-host with Alex Steele, every Friday we have a featured segment on the municipal bond market. That's how much we love the municipal
Sponsored
bond market.
by BAM,
BAM,
Build America.
Mutual, BAM, in short. So we get that going. We're going to talk munis here in surveillance here. Craig Brandon joins us here. He's co-head of the municipals investing in Morgan Stanley Investment Management. Craig, let's just start. Just stand back here. How have the munis bonds, the market, performed so far here in 2024?
Actually, the market's performed really well. We've backed off the last couple of days here, but as treasuries have backed up during the year, munis have really outperformed. And, we're really such a technically driven market. And, what does that mean? It's supply demand, right? So what usually happens in the muni market is we're so driven by Fed actions. When the Fed is raising rates, the money tends to go out. When the Fed's lowering rates, the money tends to come in, and people try to get ahead of that. And that's simply because, for better or for worse, people think, we're a duration market. We're a high-quality duration market for the most part. So what we've seen year to date is I think we're at like 16 weeks in a row of money coming in the market. That supports the market, even though we're at record levels of new issuance this year. There's still a lot of demand for munis. So we've been outperforming for the year so far, especially in high yield.
How sexy are high yield munis?
Yeah, so high yield's really been the story. There's been so much talk about corporate high yield being the best performing asset class year to date. There's a municipal high yield market. We manage about a $1.6, $1.7 billion muni fund, and that year to date is the second best performing fixed income class out there. If you look on a 1 year basis, high yield munis are the number one performing fixed income asset class going back 12 months. They're up, before yesterday, up over 18%. So high yield muni, and again, really, really technically driven. So much money coming into the high yield muni space and just not a lot of issuance out there.
What is a typical issue in the high yield space for munis? Like a monorail in River City?
A lot of the muni issuance in high yield is project finance. So things like charter schools, right? A lot of charter schools. There's hospitals that are below investment grade. There's a lot of project finance revenue out there. Things like power plants are non-investment grade. There's hospitals that are non-investment grade. There's real estate deals that are non-investment grade. Think of places like the Villages in Florida, right? Everybody knows about the Villages. But, I started Eaton Vance in 19...
Paul said it that way. So.
Yeah, is that where Paul...
There you go.
I mean, when I started in 1998 at Eaton Vance, we were some of the original investors in Village's muni bonds that were non-rated at the time. And what they do is they build the infrastructure. You build the sidewalks, you build the roads, you do the infrastructure, and then a developer comes in and builds the houses, right? So there's a lot of real estate deals in Florida, California, other parts of the country that are non-rated, right? So there is really a lot of muni high yield. I think most people think of munis as, general obligation bonds, City of New York, State of California. That's only about 15% of the market, right? So you're really, high yield munis are very project revenue driven, and there's a lot of opportunity there.
How about that? So all the spending that's coming out of Washington, D.C., the Infrastructure Act and so on, how does that flow through to the municipal bond market? Is some of that funded in the municipal bond market?
Really what we've seen is a backup in issuance the last couple of years, right? So issuance in 2022, 2023 was very low. And the theory was that there was a lot of money, a lot of infrastructure. I mean, remember, munis are infrastructure, right? We talk about it all the time. I said, the industry sort of needs a PR person to tell what we are. So you think of roads and bridges, you think of airports, you think of colleges and universities, general governments. They got so much federal funding during COVID, they just didn't need to issue as much, right? So what we're seeing this year is a huge spike in issuance. We're I think, over $400 billion year to date of issuance, and it's only November. So the impact we've had has not necessarily been on actually issuing bonds for those things, but it's actually reduced the issuance. That now that the COVID money is starting to run out and being used up, we're seeing a huge spike in issuance going on this year.
Okay, the issuance is dependent upon the COVID relief money and the IRA?
Yeah, it's driven by that, because if you're getting federal dollars for capital projects, you don't really need to issue bonds. Because remember, muni bonds have to be used for capital. You can't issue muni bonds for general corporate purposes to put on your balance sheet, right? The reason there's a tax exemption is it should be used for infrastructure, for capital financing. So there's an IRS rule that basically lists the things you're allowed to use muni bond proceeds for. So if you think of the IRA and you think of other COVID monies, they were used by governments to fund infrastructure, right? So if you're getting more federal dollars to fund your infrastructure, you don't need to issue as many bonds.
The reason I own New Jersey municipal bonds is because they're triple tax-free. Then somebody told me about this taxable municipal bond market. What's that all about?
Yeah, so it's like I said, there are IRS rules that allow you to issue municipal bonds for certain purposes to get the tax exemption. There's a taxable market for everything else. Okay. So let's say that Harvard University wanted to issue bonds and they wanted to build a new dorm or a new laboratory facility. That would qualify under the IRS rules for tax-exempt financing. But let's say they wanted to put a restaurant and a dining hall associated with it, right? Well, then that would be a taxable bond that wouldn't qualify. And where we're seeing big interest on the taxable side is from foreign investors, right? Asian investors. European insurance companies are very big buyers of taxable munis, because when you look at taxable munis, they're very highly rated, mostly AA, AAA bonds, similar yield to corporate IG, similar duration to corporate IG. But what institutional investors overseas look at is a 0.2% default rate for rated munis versus corporate default rates are a little higher. So you can diversify your fixed income portfolio without giving up yield or duration. So, we spend a lot of time in Europe and Asia talking to investors about that, and it's pretty popular over there.
It is. All right, Craig, thanks so much for joining us, coming into our studio. Craig Brandon, he's co-head of Municipals for Morgan Stanley Investment Management. As you mentioned, he was part of Eaton Vance. So for those out there that don't know, Eaton Vance is I'm talking one of the first, most original Boston old money investment firms up there. 1924, back in the day. Eaton Vance, a great name, acquired by Morgan Stanley recently. A good acquisition, I think, for Morgan Stanley. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, John, Lisa. Vice President Kamala Harris and former President Donald Trump are in a statistical tie in each of the 7 swing states, according to the latest Bloomberg News Morning Consult poll. Details from Bloomberg's Amy Morris in Washington.
Donald Trump and Kamala Harris are now in a statistical tie among likely voters in each of the 7 swing states. Each candidate now has 49% support among likely voters, with a margin of error of 1 percentage point. So to move the needle, Trump's campaign is aiming to mobilize voters who haven't typically turned out. Harris has recently looked to fire up women and pick off moderate Republicans who aren't Trump devotees. Trump has an advantage on the economy. 36% of likely voters called the economy the single most important issue determining their vote. And Harris scores higher on mental fitness, honesty, and compassion. In Washington, Amy Morris, Bloomberg Radio.
Last night, Kamala Harris addressed undecided voters in Pennsylvania at a CNN town hall, following a report this week in which Trump's former chief of staff, John Kelly, joined a chorus of former staffers who warned Trump would rule like a dictator. CNN's Anderson Cooper pressed Harris on how she would describe the former president.
When they hear these facts, I think it compels a lot of people to be concerned about the future of our country with Donald Trump at the lead.
You've quoted General Milley calling Donald Trump a fascist. You yourself have not used that word to describe him. Let me ask you tonight, do you think Donald Trump is a fascist?
Yes, I do.
Donald Trump responded to Harris's comments at the CNN town hall, saying she has a warped mind. In Duluth, Georgia, Trump rallied supporters last night, asking them to go out and vote.
With your help, 13 days from now, we're going to win Georgia. We're going to defeat Kamala Harris, and we are going to make America great again.
U.S. Secretary of State Antony Blinken announced today additional $135 million in U.S. aid to the Palestinians during his Mideast visit. Meanwhile, France will provide a 100 million euro aid package to support Lebanon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, John, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. All right, I'm a Yankees fan. I'm rooting for the Yanks, obviously, in this World Series. Lisa, I know you sport the Tom Keene Yankee jacket on occasion. You're a Yankee. Is your household a Yankee household?
That's the only thing we agree on.
Only thing you agree on, yeah.
Yankees.
John Tucker, do you have a dog in this hunt here at all?
I was told I have to be a Baltimore fan.
Oh, that's very good.
That's
I
like
think we all do.
That's right from the top, by the way.
We all do. All right. So I can just tell you from the Fox television network perspective, it couldn't get any better than this. New York and Los Angeles. I mean, if I'm an advertising salesperson for the Fox TV network, I mean, even I could sell spots for this World Series. I mean, it's just going to be...
That's all people are talking about.
It's going to be monster ratings, and, they probably kept 10 or 15% of their inventory out from the market. They're going to just gorge on it this time. Good for them. We're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, let's get to futures. They're mixed ahead of another busy day of earnings. Want to get to some of them? Mattel up more than 3%, posted third quarter profit, beat estimates despite lower than expected sales, pushing it to trim its full year revenue outlook. Meanwhile, Hasbro, well, it cut its consumer products segment revenue forecast for the full year. The Boston Globe also putting this out that Hasbro set to lay off dozens of workers, their shares down about 0.1%. IBM shares down 3%, reported underwhelming sales. Let's get to NASDAQ futures. Getting a boost from Tesla earnings, up about 0.8%, 176 points. Dow futures down 0.1%, 42 points. S&P futures up 0.4%, or 27 points. The two-year yield, 4.06%. That's down 1 basis point. The yield on the 10-year, 4.22%, and that's down 2 basis points. Want to check in with Boeing. Their shares down about 2% after factory workers rejected that new labor contract. And then also checking in with McDonald's. Their shares rebounding. They fell about 5% yesterday. Right now, those shares up nearly 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. The IMF, geopolitics, they are meeting in Washington, D.C. As we speak. A lot on their plate as they discuss global geopolitical events, obviously in the Middle East, in Ukraine, in Asia, a lot on the plate. You think about climate change is another global issue, lots going on there. Nadia Calvino joins us. She is the president of the European Investment Bank. She joins us from our Washington, D.C. bureau. Nadia, thanks so much for joining us here. You're down in Washington, D.C. at the IMF. Could you give us a sense of what are some of the key topics that you guys are focused on down there in Washington?
Well, it's a pleasure to be here, and indeed a lot on our plate, as you were saying. There's been a lot of discussion about the economic outlook and the resilience, the remarkable resilience of the global economy, but also the current risks derived from the geopolitical tensions, uncertainty, and fragmentation of global markets. And we will also be talking a lot about climate action, climate finance, and how to support most vulnerable countries around the world.
I have a dumb question for you, Nadia. Could you explain exactly what the European Investment Bank is and does?
Yes, no, of course. The European Investment Bank is one of the European institutions. It was created when the European institutions were created, decades ago. And it is the largest multilateral financial institution in the world with a 600 billion balance sheet. We do 90% of our investments inside the EU, financing all the key infrastructures from energy, trains, also innovative investment in frontline companies, frontier technologies. And 10% outside the EU, but that means 8 to 9 billion euros a year. So we're a very important partner of the multilateral family.
Nadia, in terms of infrastructure, talk to us about the European Investment Bank and its view on what's transpiring in Ukraine. What is the EIB doing now and then, in the years ahead for the good folks of the Ukraine?
Yes, we're currently probably the most important investment partner to the Ukrainian government. We had a roundtable yesterday where there was a very strong support. I was impressed by the very strong statements that were made around the table to support Ukraine. Our support to Ukraine is unwavering. It's about peace and security for Europe, of course. And the EIB is investing right now, focusing and supporting Ukraine in the run-up to the winter, so repairs and resilience of energy infrastructures. And going beyond the energy sector, we're supporting investments in housing, schools, education, and also private companies. We just launched an export credit guarantee facility, which has been oversubscribed for European companies trading with Ukraine. So we will continue to support Ukraine now during the war and hopefully very soon in their reconstruction.
What is the European Green Deal and what's your investment there?
Well, more than 50% of our annual investments go to the green transition, and that's why we're consolidating our role as the climate bank. And this has to do with the energy transition we just discussed, but also the deployment of net zero technologies, from green hydrogen to other green fuels, and also making sure that Europe continues to be one of the leading players worldwide when it comes to green tech. And I think that we're getting on with it. The private sector is also getting on with it. Just yesterday, we released a very interesting investment survey that shows that European companies, more than 60% of European companies, are actually investing in green technologies. And I think that's very good news, so that we can really move to a net zero economy and make climate and competitiveness just two sides of the same coin.
Nadia, across the 27 countries in the European Union, where are the biggest concerns for you right now? Where are you maybe spending most of your time or more of your time?
Well, we invest in the 27 member states, and we are investing very heavily right now in this green transition to make sure also that Europe becomes strategically independent. You know, the war in Ukraine has shown us that being dependent on other parts of the world, and in particular fossil fuel producers, it's a vulnerability for Europe. And so there's a strong determination to make the green transition a European success. And we're very much focusing here. But of course, we're also stepping up our support to Europe's security and defense industry, digitalization, social infrastructures, trying to make sure that we continue to be a prosperous part of the world and also protecting our values.
And how dependent is your investment portfolio on U.S. policy, specifically the outcome of the election here?
Well, we obviously will continue to be closely partnering with whoever is leading the U.S. government. And the transatlantic relationship, I think, is quite strategic. And it is a win-win relationship, both to the U.S. and to Europe. So we have every interest to continue to build close ties from the cultural point of view, from the economic and financial point of view, and of course from the security and defense point of view too. And that doesn't influence really our investment activities at the EIB. We will continue to be a very important investment player inside the EU and of course around the world.
So as Europe, I think, adapts to the new world where Russia is much more of an adversary than maybe they were prior to the invasion of the Ukraine, are most of the member states in the EU, are they operating as if, at least for the foreseeable future, Russia will not be in any way, shape, or form an economic partner?
Well, right now we're focusing very much in supporting Ukraine. I hope that this war ends as soon as possible and that we can, see how the new global order is shaping up in a manner which is more constructive. What we're seeing in the last years is growing tensions, growing wars, and that obviously is not good for the global economy, and that is not good for the citizens' perception of stability and happiness, if I may put it this way. So I really hope that we can move to a more constructive approach throughout the world, from the perspective of the European Investment Bank and from the perspective of the multilateral development institutions more broadly that we're gathering here in Washington these days. I think that we're showing that we're walking the talk. We're becoming as effective as possible, working as a system, cooperating closely together so that we can play the role that we're called to in supporting global stability and also bringing prosperity and protecting most vulnerable countries around the world. I think that this shows that together we're stronger and that by cooperating we can get further and faster than by tension and conflict, of course.
Nadia, thank you so much for joining us. We really appreciate you taking some time to speak with us. Nadia Calvino, president of the European Investment Bank. The IMF is meeting in Washington, D.C. This week, and obviously a lot on their plate in terms of geopolitics and financing the growth of Europe here. So looking at these markets, futures still a little mixed here. We've got the S&P up 24. The Dow down 74, and the NASDAQ leading the way up 164 points. That's 0.8% for the NASDAQ futures. We'll get that market open for you in just moments. Looking at the yield curve, the 10-year Treasury off about 2 basis points. We're now trading around 4.22% on the 10-year. WTI crude oil, I'm calling that out for Alex Steele, our energy maven. It is up 0.6%, $71.20 per barrel. Gold higher yet again. I'm not sure if that's a record today, but darn near it. $2,753 per ounce. And for Matt Miller, who's doing his TV duties right now, he's our crypto guy, up 1.6%, $67,600 for Bitcoin. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And the opening bell report brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit BNY.com. All right, we've got a ton of earnings for investors to sift through today. We already heard from Southwest, American, UPS. We're also seeing the impact from Tesla from yesterday. Add to that more economic data. U.S. initial jobless claims declined to pre-hurricane levels. We have the markets open, so let's see how things kick off to start a Thursday. S&P 500 will start there, up about 0.2%, 15 points, 5,813. The Dow down 0.2%, 102 points at 42,407. And we have the NASDAQ up 0.5%, 105 points at 18,381. We have the two-year yield 4.06%. That's down 1 basis point. The yield on the 10-year 4.22%. That's down 2 basis points. Heading over to commodities, we have Brent crude up 0.6%, $75 a barrel. WTI crude $71 a barrel. We'll go to spot gold. That's higher, up nearly 1%, $2,700. $742 an ounce. To currencies, we have the dollar weaker, Japanese yen stronger at 152.11 against the dollar, euro, British pound stronger. We have Bitcoin up more than 1% at around 67,000. At the open, want to check in with Tesla up 13%. We have Boeing down 2%. Southwest Airlines down about 0.7%. American Airlines up 5%. That is your Bloomberg opening bell report. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for, what's it, Tom Keene? Is that, he's a surveillance guy, right?
Can anybody really
exactly
sit in for
right.
Tom Keene?
He's doing his best.
I think not.
John Tucker can certainly do it. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. What we need here with this market opening a little mixed here, we're at or near all-time highs for the stock market. A lot of concentration risk for a lot of people, a lot of geopolitical risk for a lot of people. We need somebody with some perspective, and we got that with our next guest, John Hurdle, Executive Chairman, Hurdle, Callahan and Company. Of course, his career peaked at State College, Pennsylvania. He went to undergraduate and an MBA degree at Penn State University. He also served in the United States Marine as an officer, so we thank him for his service. John, we step back here. Where do you see value, opportunities? When you sit down with your team and you whiteboard it, where would you start today?
First of all, everything continues to be strong. And I always think about this, Paul, that there's a question between the madness of crowds and the wisdom of crowds. And right now, the wisdom of crowds is telling us that the market's strong. We've got lots of negative news. We've got a very controversial presidential election. We've got geopolitical turmoil, and yet the market keeps going higher. They're just shrugging that off. So everything's telling us to stay fully invested right now.
And the obvious question, though, relates to valuations at this point. Too expensive for you?
Not too expensive, but certainly on the radar. Once again, the madness of crowds, wisdoms of crowds. So right now, what logic would tell you is that it's expensive. But valuation never picks up, really can't ever accurately estimate future earnings. So what the market generally is saying when markets are going higher against valuation is that you're missing the earnings. So the earnings are going to accelerate at a point that justifies the current valuation. And you got to listen to the markets. The markets have a lot of wisdom to you until it passes into madness, and we don't think we're there yet.
Are you listening to the bond market? What's the message being sent there?
Well, the bond market is, so foundational, but it's pretty stable at this point. I mean, it's basically we're getting close to a relatively low inflation, and interest rates are relatively stable, and they're not that high. I remember when I started the business a long time ago, and we started our business 36 years ago, money market funds were at 10%. So this interest rate environment is fine. We've got a strong economy. We've got a reasonable interest rate environment. Inflation is under control. And so there's lots of reasons that the equity market should go higher. Valuation is the one issue. And as I said, you got to be careful that those future earnings aren't going to surprise you on the upside.
Hey, John, our previous guest was the president of the European Investment Bank. We're talking globally. How do you guys think about opportunities outside of the U.S.? Historically, how have you kind of gotten exposure there, if you have?
Well, it goes back to a valuation issue. Normally, Europe trades at about a 15% valuation discount to the United States for all the reasons that we know. Better place to do business, free enterprise, fewer regulations. That's all true. So when people say to me, yeah, but America is a better place to do business, that's true. So therefore, it traditionally trades at a 15% discount. Europe does. Today, that's a 35% discount. And so from a valuation standpoint, it's powerful. You mentioned earlier, Paul, that's because they don't have the tech stocks. That's true. What's going on right now is almost everything can be reduced to an NVIDIA trade.
Yeah.
So the Mag 7, we said this earlier, represent 35% of the market cap of the S&P 500 and 22% of their earnings. That's a disconnect. And so what we're saying right now is they're terrific companies. But as Howard Marks often says, there's no asset in the world that's a good investment at any price. And so when they get this high, you have to look at them from an investment standpoint. And if you're serious investors, I think in the world of investotainment, we're CIOs, so we're way on the investment side. We're very serious about investing. We're managing money for families across the country and these mission-driven institutions, all of whom have an important mission to fund with their investment program. So we really are focusing on 100% on acquiring future cash flows at the most attractive rate. So if I can buy cash flows in Europe cheaper than I can buy them in the United States, I prefer that. So on the margin, we're shifting away from the S&P towards Europe.
When some of us started out, we didn't have PCs. We didn't have cell phones. We didn't have a lot of things. Technology. Talk to me about that in terms of investment opportunity and what the future holds.
Well, when I started at Goldman Sachs in 1982, the market closed at 1,000. The Dow closed at 1,000 at the end of the year, and today it's 42,000. So a lot of things have changed. The things that have been sea changes, I think, have been globalization and technology. And so they are changes of the magnitude of the Industrial Revolution. So they are hard to estimate on the upside. Technology is going to transform our world. We invest with Andreessen Horowitz, and Mark Andreessen said some years ago that software is eating the world, and now AI is eating software. So what does that mean? Yet to be seen. I do think that investors are getting a little impatient with seeing all the money that's pouring into AI without any results yet. So, this is all practical. And basically you've got this tension between kind of Newtonian physics, valuation on one side, and Daniel Kahneman on the other side, what sentiment and recency bias and things like that. And so as a CIO, you've got to have the wisdom to try to walk between those two things.
But can I throw caution to the wind and just ride it out for the long term?
No, that's why we say on the margin, we're shifting away from the Mag 7 and we're shifting away from the U.S. on the margin. We're still fully invested. We still got lots of exposure there. If you own the S&P, you own lots of Mag 7 stocks. But on the margin, we think it's time to consider other options. And technology, I think, is going to, lo and behold, it's like somebody said that internet thing is here to stay. Exactly. Technology is transforming the world. We still got a lot of whiplash from globalization that nobody really talks about as much anymore. A lot of this crazy election we're going through, this crazy cycle, is kind of a reaction worldwide to globalization. And so that's one we're still trying to digest. And then
globalization and technology, I would add. People
100%.
Just don't know what the future is going to be for their jobs, for productivity, for anything on that front.
Right. And if you go back to the Industrial Revolution, people were frightened then. The word sabotage comes from people putting their wooden shoes into the machinery because they were afraid of what the future would bring.
The Luddites.
Yeah. So, I think as an investor, you've got to be an optimist. But when you look at the market going from 1,000 to 42,000 during my career, there's reasons for optimism. And optimists in the United States have always won. So we want to stay fully invested, but on the margin, place our assets where the cash flow is likely to be more attractive based on the price.
Fixed income. I can sit at a 2-year U.S. Treasury and get 4.05%. Is that my fixed income play, or do I look for some credit risk and some incremental yield?
Right. We are more positive on private credit than we are on public high yield, for example.
Interesting. Okay.
But
and how do you get exposure to that?
Well, we've got $20 billion under management, and so we have access private markets, and we've got our own managers, our own specialists that are expert at picking those managers. When you get into private markets, it's critical who you're with. But if you have access to great private credit markets, great private credit managers, it's a very attractive space. And we're not afraid to have a little more duration today because it doesn't feel like interest rates are going higher. So if you can lock in a little higher yield, and I think that's why the 10-year Treasury is still low. A lot of people agree with me, and they want to buy that 10-year Treasury.
What keeps you up at night?
What keeps me up at night? Very little. I sleep well, actually. But, I think what worries me is the fundamental issues in the country that are affecting the election. So this acrimony with the presidential election, in my view, is really symptoms of a deeper problem. And people think that they are the problem, but they're not really. They're symptoms of a grander problem. So, I wonder about the world that we're leaving our grandchildren and what we can do about it that's very constructive.
John, thanks so much for joining us. Always appreciate getting some of your time. John Hurdle, he's executive chairman, Hurdle, Callahan and Company, and again, a proud Penn State graduate. So there you go. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, John, Lisa. The presidential contest between Donald Trump and Kamala Harris could hardly be tighter. The candidates are statistically tied among likely voters in each of the 7 swing states in the Bloomberg News Morning Consult poll with razor-thin margins. Across all 7 states, the candidates are in a dead heat with 49% support each among likely voters. The poll's overall statistical margin of error is 1 percentage point. Bloomberg's Kevin Whitelaw.
every poll we've seen, it just feels that closer and closer it gets, no matter how you look at it. So, I think, I can promise you that over the next 2 weeks, the phrase you are going to hear over and over and over from anyone looking at these results is it's all going to come down to turnout. And that's just clear ultimately what is going on here.
Bloomberg's Kevin Whitelaw. Palestinian officials say an Israeli strike on a school where displaced people were sheltering in the central Gaza Strip has killed at least 17 people. The strike came as U.S. Secretary of State Antony Blinken said Israel had accomplished its objective of effectively dismantling Hamas and that ceasefire negotiations would resume in the coming days. Another 42 people were wounded. Blinken in Doha, Qatar, praised Qatar for its role in trying to help bring a resolution to the unrest in the region and announcing new U.S. aid aimed at the humanitarian crisis in Gaza.
We're announcing an additional $135 million in humanitarian assistance, water, sanitation, maternal health for Palestinians in Gaza, in the West Bank, as well as in the region.
Meanwhile, France pledged to provide a $108 million package to support Lebanon at an international conference today. President Macron said massive aid is needed as war between Hezbollah militants and Israel continues. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, John, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Coming up, we're going to be checking in with Johnny Damon, former professional baseball player. We get his thoughts on this World Series. He was part of the Yankees when they won in 2009.
And Boston, if I recall.
And Boston, exactly right. So I was just looking here. He was I like kind of going back in some of the earlier things. He was in high school in Florida, the Florida Gatorade Player of the Year back in the day. In the USA Today's high school, I guess the top prospect. So it's kind of interesting to think about kind of the careers of a lot of these great players.
But because you mentioned earlier, you think of him as a Red Sox, a Yankee, but he played with the Royals the longest.
I know,
Where do you go?
Exactly where do you go? But that's just part of the business. He's also got a new venture, currently the founder and chairman of A-Game, a beverage company leading the next generation of athletic hydration. Don't you just drink water? But the kids today, they hydrate. Lisa, do your kids hydrate? Like
They do. They have to have the big whatever is the
What
Hydro
is
Flask
that?
or whatever. Yeah, you have to.
No, you don't.
It's
Here
good
you go.
for you.
When you're thirsty, you get something to drink. I mean, the kids that I managed in Bloomberg Intelligence, they would have these old milk jugs sitting at
You're
their
like
desk filled with
talking like a
water.
football coach. It was Bloomberg Intelligence.
Exactly.
All right, everybody, take a Gatorade break.
Exactly. I mean, again, when you're thirsty, you go get something to drink. But the kids today, they just,
But the sports drink's huge.
It is.
Huge.
It is
That's
a
big
huge
business.
sector.
So I'm curious to see what he's
Yeah,
going
I'd be
to say
interested to
about
see what he said. But there's so many. You go into the stores and there's so many sports drinks, and it used to be just Gatorade, really.
Yeah.
And now there's a gajillion of them.
Did you get pep talks in the locker room at Bloomberg Intelligence?
Oh yeah, you're
Okay.
darn right I did. And if I sent you an email over the weekend about one of your companies and you didn't respond immediately, we had words on Monday.
Sorry,
It's just-
Coach.
See, exactly. No way. It's a full-time job. All right, we got more coming up. This is Bloomberg.
Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are mixed right now. We have the Nasdaq up 0.4%, 82 points. The Dow down 0.3%, 150 points, and we have the S&P 500 up 0.1% or 6 points. Where is the biggest boost coming from? I think we can all answer that. But if you go to the IMAP feature, it takes us through it step by step of the 11 major industry groups. The biggest pull coming from consumer discretionary. You click through, you have automobiles and automobile manufacturers, and you see where we're going. At the top is Tesla. Blowout earnings. Its shares right now, they're up about 16%. To more earnings, we'll go to T-Mobile. Their shares up 3%. Third quarter results beat expectation, raised its full year subscribers forecast. And finally, Harley-Davidson down 2%. Motorcycle shipments fell in the latest quarter. Fewer drivers wanted to hop on a Harley. That is a Bloomberg Business Flash. Paul and John.
All right, Lisa Mateo, thank you so much. We appreciate that. John Tucker sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube, so we got that video thing going as well. Go over to youtube.com, search Bloomberg Podcast. All right, the World Series is upon us. I mean, if you're at Fox Television Network, it doesn't get any better.
Is
Dodgers,
Yankees in terms of like TV ratings better than Yankees Mets?
Yes, because it brings in the LA market, the number 2 market in the country in size. So it's just going to be awesome. Literally, this is the best matchup you could ever have. And as a Yankee fan, I'm pulling for my Yanks. I'm calling it Yanks in 7. So hang on that what you will. Not a lot. Let's be honest. Let's talk to somebody who has some experience here. Johnny Damon joins us. He's a former professional baseball player. Boy, I thought it was just Yankees, Red Sox, but as Lisa was mentioning, it's the Royals. He was with the A's for a year, the Sox, the Yanks, Tigers, Tampa Bay Rays, and the Cleveland Indians. But I like to go early in athletes' career to kind of see high school stuff, because that's kind of where I pay attention. During his senior year of high school, he was rated the top high school prospect in the country by Baseball America and named to USA Today. Remember USA Today? High school All-America team, and was a Florida Gatorade Player of the Year. Great stuff. Hey,
Wait, Johnny, where are you? Look at that shot. Are you driving? What is going on here? There's a man on the go.
I am driving. I actually had a Boys and Girls Club meeting. We are breaking ground for the June Foundation, and we've raised a lot of money in the past, and it's come to fruition that we're going to build a 20,000 square foot playground for all these kids to, go after school, stay out of trouble, give them direction in their lives. And so that was at 9 o'clock and finished right at 9:45.
Well, we appreciate you taking a few minutes of your time here to join us, Johnny. Talk to us about just what are your thoughts of this World Series coming up? It seems like it's going to be a great series. What are your thoughts?
Yeah, well, I think everybody was hoping for the Yankees to get in, because regardless of who they play, the Dodgers or the Mets, it was going to be highly anticipated. You have Aaron Judge and Ohtani, 2 of the great baseball players that the world has ever seen. And there's going to be a lot of excitement. There is a lot of off days between the previous games, which I'm not used to seeing, or the players aren't used to having. So it's going to be very interesting who can get off on a hot note and get to scoring runs and winning baseball games.
Hey, Johnny, what is A Game?
A Game is my healthy hydration drink. No artificial flavors, coloring, no forever chemicals like a bunch of these other drinks out there. And we created it back in 2012. Central Florida was hot. Athletes were very dehydrated, and unfortunately we lost a couple of these kids, and we just wanted to make a product that helps you, like all the vitamins and nutrients and minerals we have in it. It works. There's no wasted space. I mean, I'm not that kind of guy. I like to do the right thing, and you have to bring your A game for every single thing you do, whether it's being an athlete, a parent of 8, which I am, a teacher. So always bring your A game, and there's never an excuse to have. And I'm not known to ever having excuses. I go about my business and try to do my very best at all times.
Hey, John, Lisa Mateo here. Okay, you're 8. I only got 2. Okay, but they've all been through the sports. I mean, they're athletes, but these kids really drink this stuff up. So the competition, though, out there is pretty tough. I mean, what makes you think you can kind of hang in there with all the competition on the shelves?
Oh yeah, it is a great competition, but I love competition. And fortunately, I was able to win a couple World Series. We have a strong team with us, and we know it's going to be tough, but we also know that we have the cleanest product, but on top of it, it tastes great. A lot of these products on the shelves, they're just not good, and you can do all the science behind it. We have the white paper to prove it, and we just need to market and advertise. People can go check us out at drinkagame.com. I've got Bo Jackson on my team, Tyler Adams, who's from just north of New York City, U.S. soccer captain that if Pulisic doesn't play, so we are going strong. We have Scott Connet, the chef. So check us out online. You can buy us at Amazon, Shopify. We're in Giant in the D.C., Philadelphia area. Up north, we're in Shaw's and Stop and Shop. We're crushing it in Piggly Wiggly down south. and a lot of these big programs are buying us directly because a lot of these schools are Pepsi or Coke schools, so they have to take on what the school wants, but the athletes get to decide. So we've sold some to Alabama, and also Auburn's been a strong supporter for us. And we also have a government deal with the state of Louisiana. So a lot of good stuff happening for us right now.
Hey, Johnny, in this World Series, there's so many big names. Ohtani, Judge, Juan Soto's a really interesting one. Arguably the best hitter in baseball. He's going to be a free agent after this year. Where do you think he goes? A lot of folks here in New York are wondering Mets, Yankees, maybe somewhere else. What do you think?
Oh, man, he is so good. I mean, I remember him as a 19-year-old and just being probably the best player on the field. I think he really loves being with the Yankees. He is the man, but he doesn't have to be all the time. I mean, you have Aaron Judge, but I know Steve Cohen really likes to make a splash, and obviously him playing for the Mets would be amazing. And I mean, the money they're throwing out there now, I mean, who knows? I mean, Ohtani signed a $70 million a year contract. My first year in the big league, the Kansas City Royals had a $16 million payroll for the entire team. So the game has changed since 1995, 96 when I broke into the league, and I'm happy for these players. I know it's a grind. I also know regardless of where Juan Soto goes, he's going to be a very rich man.
Yes, he will. How about Ohtani? I mean, we haven't seen.
He will be.
Yeah. Hey, John, like Ohtani, again, another just incredible player. We haven't really seen anything in Major League Baseball, maybe since Babe Ruth here, in terms of how talented the guy is at all facets of the game. What's your take on Shohei Ohtani?
Oh, he's so good. And just when you think he might have got beat by a pitch, he turns it around, and he's just so good, and he's great for baseball. And this matchup, the whole world is going to be paying attention. I mean, everybody knows the Dodgers and the Yankees, and with Ohtani being from Japan, I mean, these TVs this might be the top rated World Series ever.
All right, so let's get your prediction, Johnny. Who do you think is going to come out on top here, Yanks or Dodgers?
Well, I love the Yankees. I played for the Yankees. I'm all for the Yankees, and I'm going with the Yankees in Game 7. I think it's going to be made for TV. If they could do pay-per-view, I think a lot of people will tune in, but it's going to be fantastic. And glad Fox has it, and it's going to be a great World Series.
All right, Johnny, thanks so much for joining us. Really appreciate it. I know you're busy. You're driving from an event probably to another event. Johnny Damon, former professional baseball player, most notably or most in this market here in New York City for the Yankees and for the Red Sox, as well as a bunch of other teams.
Yankees
and Sox. Yeah, so we'll see. You know, it could be a good thing. And Johnny's also currently the founder and chairman of A-Game, a beverage company leading the next generation of athletic hydration. So appreciate getting a few minutes of his time as we get ready for the World Series kicking off tomorrow in Los Angeles. Chavez Ravine, another great place to see a baseball game. We're going to have more coming up. This is Bloomberg.
No one else can speak